Home buyers are vanishing. Price cuts, they're piling up. Inventory is spiking in key markets. Maybe for the first time since 2008, we're seeing early signs of some forced selling. So make no mistake, something is definitely breaking in the housing market. And the crash that people have been warned about and talking about, it may already be here in some markets. But before you get too excited or before you sit on the sidelines forever, you need to understand what's really going on underneath the headlines. And so my name is Jason Ferrier. Welcome to my weekly housing market update on the Housing Nerd. I've been a realtor and investor in Central Ohio for the last 7.5 years. And it's doing something different today. I have disabled ads on the live stream. So you should not see any ads on the live stream today. But the caveat to that, and I'll leave the ads off on the live stream now, if once I post the live stream and we're all done this morning, then I'll turn the ads back on. So if you tune into the live stream, you won't have the ads. I'm trying this as an experiment to give you a better viewing experience. And the only thing I ask is that if you get value out of what I'm reviewing today, if you get some insight, if you learn something about your housing market or the housing market, give me a thumbs up, a like, and throw me a super chat. I have a goal today of 5 super chats. If we get those 5, and they can be any amount, I don't care if it's 99 cents or whatever, or $100. Doesn't matter. Get 5 super chats. I'm going to grab my dogs. You're going to get to meet my dogs, Elaine and Jerry. I have a lot of dog lovers on this channel, so I thought that'd be cool. But yeah, that's what's going on. Now, listen, I do not care if you buy a home. Like, it's not going to affect me if you don't purchase a home or you do purchase a home. It's not going to matter to me at all. I'm here to give you the data you need in order for you to make your own decision. I'm not going to tell you the housing market is toxic and you shouldn't buy and that you should wait on the sidelines. And I'm not going to tell you that you should run out and buy a house now. I'm not going to be the typical realtor out there saying, hey, you got to get out there and buy a home today. What are you waiting for? It's never been a better time to buy a house. Marry the house, date the rate. I'm not going to say that. It's not how I operate. So this is all about education and interaction. So please take advantage of the fact that I'm not putting ads on here. Interact and let's make this happen. So there's some interesting info that came out this morning before we get to the Redfin update. And by the way, how we'll do this is we're going to look at the national update first on Redfin. Then we're going to look at the key markets you want to review. Now, sometimes this thing will go 2 hours, 2.5 hours, which is fine with me. I want to be here to review the markets that you care about. So if you have a market you want me to analyze, drop it in the comments and I'll do my best to get to it. If I miss it, or if I skip it, or you sense that I'm not going to get to it, put your hand up again and throw it in the chat and hopefully I'll see it. And then obviously if you're watching the live stream on a replay, put it in the comments and I'll get to it hopefully on the next one. So there is something that we need to, a couple things we need to review because there are definitely cracks in the housing market. There are. It's not all over the place. It's not complete doom by any means. But let me show you some stuff that I got this morning from, you guessed it, Resi Club Analytics. Like, they must have been reading my mind knowing I was doing this live stream. And this is about, let me see. I'm going to let's look at student loan debt. Because this is like a canary in the coal mine, right? You want to talk about stress in the housing market before we get to the national update. Let me show you a couple slides here and show you what's really happening. So this is percent of loan balances 90 days or more delinquent by loan type. Now, this isn't a mortgage. We're going to get to foreclosure data here in a minute before we jump into the national update on Redfin. But this is pretty crazy. Like, and this is again from Resi Club Analytics, who is like amazing for content creators. I mean, it's fantastic. If you look at these different types of loans, like look, basically you've got the blue line here, which is the mortgages, right? So right now, if I look at mortgages or HELOCs, it's about a 0.9%, approximately 0.9% of mortgages and HELOCs, home equity lines of credit, are more than 90 days past due. So that's not very many. It's just not, right? When you look at it. But look at this. Look at student loans. 7.7% of all student loans are more than 90 days past due. And I think this is from the New York Fed. That's where they got this information. And this is pretty startling. Like, look at that line. Look how, this is something to take note. Like, look how the delinquency rate during COVID was like 11%. I'm sorry, during 2013 through 2017. But then during COVID, that line dropped substantially. Like, the percentage of folks with student loan debt that was 90 days or more past due fell off a cliff because the government interfered and put in extend and pretend. Like, you could see the student loan debt delinquency rising as we entered the GFC. And then it really spiked when people basically didn't have jobs, right? And then it went sideways at pretty consistent rates all the way through the 2000s. I thought that was really interesting. And then it went down big time all the way to 0.7% of all student loans 90 days or more delinquent. And then it spiked significantly, like straight up, like it looks like an error in the graph. So there are a ton of people right now in pain with student loans. And that's important if you're thinking about the housing market crash, because the more people that can't afford their student loans, they're going to have to make a decision. If they own a house, so pretend these folks with student loans own a property, their primary home, even rental properties, I guess. And they're like, all right, I need to pay my student loan. I need to pay my student loan, or I need to pay my mortgage. What am I going to do? You know, which person am I going to pay? Well, with student loans, it's like you have, if you don't pay, you can get your wages garnished, and you really can't discharge it in bankruptcy. I'm not a lawyer, or and I don't play one on TV, but from what I've read, you can't discharge those in bankruptcy, student loans. So they look at the house and they go, well, I don't want to be homeless. I don't want to be a renter. I don't want to lose my home. But like, I can probably call my bank and do some workarounds. They're not going to garnish my wages probably. I can always declare bankruptcy or just walk away from the house, but I don't want my wages garnished or my tax refund garnished. So I'm going to pay my student. I'm going to, I'll pay the student loan, but I'm not going to pay my mortgage. So my point is, as more and more pain hits the student loan market, you're going to see more and more stress, I think, on mortgages. And so that brings me to this graph, which is also pretty interesting. And this is brand new from Resi Club data. This is foreclosures by quarter, the number of foreclosures. And this was by the New York Fed as well. And when you think about the housing market crash, you have to think about forced selling, about those issues. And so the question today is, should you wait for this crash, or should you buy a house now? And look how foreclosures have spiked. Now, they did drop quarter over quarter, they dropped slightly recently, but overall that trend is up. And you can see during COVID, that trend, there was no foreclosures at all. Back in 2009, we had over 500,000 foreclosures in one quarter. And then that number dropped substantially, obviously, as people came out of the GFC, but then it went off a cliff when they did extend and pretend with the government. And as they've released that extend and pretend, somewhat released it, but we're still in it really until October, you can see those foreclosures start to rise. And I think this spike right here, if you can see it, this spike in Q1 of 2025 was all driven from VA loans, in my opinion. The VA loan moratorium ended and foreclosure spiked. So when you think about, should I wait to buy or should I buy now? That's kind of my overall theme for the video. And I'm thinking, all right, well, it looks like foreclosures are increasing. It looks like the pain is increasing. So if you think about that student loan chart, right, that we looked at, you think about that student loan chart and the spike in student loan delinquencies. Now we know that foreclosures are rising. I'll bet they're still low, historically low. Now look at this. This is really crazy. This is a chart that shows the percentage of mortgages that are delinquent and what type of loan they have. And this is really where you got to pay attention, right? Because if you look back, well, let's just look at right now and tell you what's going on. So FHA loans account for, what's that? So the share of loans, right? So you're talking about like nearly 20% of loans. I just got this info like 10 minutes before the live. But if you look at this, it has the FHA loans is about nearly 20% or it's approaching 20% of, was that how they're doing this? I just want to double check. He doesn't say the percentage on here, which is strange. But if you just look visually, you can see that it's the bulk of loans. And what I read yesterday from Black Knight was it's about 50%. 50, I think it was actually 52% of all seriously delinquent loans are FHA loans. VA loans are a pretty small portion. GSE loan, which is the government-sponsored enterprise, which is the Fannie Mae, Freddie Mac loan. Those are a smaller portion, obviously, than FHA. But I want you to also pay attention to this other. And look back during the GF. This was crazy. Look back during the GFC, the percentage, like the share that was other loans, not Fannie Mae, not Freddie Mac, not VA, not FHA, other. Now, what is other? Well, good question. Other is mortgages that include everything from jumbo loans, which exceed the GSE limits, like really expensive homes, like a $2 million home, portfolio loans, non-QM loans, and private hard money loans. So a non-QM loan, I'm going to give you a real life example. I just interacted with a mortgage broker a couple days ago to look at a non-qualified mortgage loan, a refinance for a building I own, a residential building. What's crazy is they require a credit check, but they don't require a tax returns really usually. They go off what they call a DSCR, debt service coverage ratio. So they want to make sure my building cash flows. The point of all that is, before I go too far into the weeds there, is that these are investor loans. These are all investor loans. That's what these black bars represent. So during the GFC, and this, I'm going to give Travis Spencer and Melody Wright credit for this because they called this out they've been calling this out for a long time. And I was like, is that true? And they've basically been saying back in the GFC, most of the pain was from non-qualified mortgages and was from investors. Well, according to this data, they're correct. Like the pain back during the GFC was from investors. I mean, you could see the black line. So those are people like me that are getting loans to buy or refinance that operate outside of like the traditional bank loan you would get that's government sponsored. The other loan that I get is a portfolio loan where they pool like 2 or 3, 4, 5, 10 properties together, and then they'll loan you money based on all those properties at once. So those are also, there's also a share of those that are in trouble with delinquency. The point is that delinquency, pain is building. There's no doubt. It is building. But it's not everywhere. And it's not, it's really not 2008. It's really not. So the question is, should you wait or should you buy? That depends on your market. And it depends on what you're seeing in your market. And so that's what we're going to try to figure out today, or I'm going to try to at least give you some data so you can make that decision or start to make that decision. And if you can't make it today or you don't get the info, I'm going to share where you can get the info. But I thought this was kind of telling. So you've got pain in obviously the student loans. You've got pain with FHA. And by the way, The thing about the FHA loans is if you are delinquent as a student loan borrower and you are FHA, VA, or GSE, meaning most of the bulk of mortgages out there, if you're late paying your student loan payment, you can't qualify for basically the workouts that the government can give you for your mortgage. Like if you fall behind in your mortgage right now, you can call your servicer, and up until October of this year, you can work out some pretty extensive forbearance programs where you're not making a payment in some cases, and the government's making the payment for you and then putting it on the back end of your loan to get you through a tough time. But if you don't make a student loan payment and you're delinquent, you can risk not having accessibility to that relief. And that could be a big deal. I mean, you could end up defaulting on your student loan and defaulting on your mortgage. So the question is, with the student loans and the mortgages, do you guys think that's going to cause enough pain to cause a 2008 style crash? So those two pain points I see as a major problem. Obviously, the job market doesn't seem to be trending correctly. But I will say, as a buyer, there are some things you need to watch out for when it comes to demand coming into the market. We're definitely going to cover that today. So got 30 people on. Give me a thumbs up if you got on. And no ads today on the live stream. Whoa, looks like we already got some super chats. Awesome. How many did we get? I got a Fit and Fab. What's up, Fit and Fab? Thank you so much. I appreciate it. Yeah, the goal today is 5 super chats. I turned off the ads for the live stream in lieu of doing the super chats. I'm looking for 5. I think I got 2, so I got Fit and Fab. Thank you so much. That's awesome. And if I happen to hit the 5 super chats, I'm going to bring out the dogs, Elaine and Jerry, and you get to meet them. Jerry's usually not happy this time of morning. He's usually sleeping until 3 p.m. And so if I wake him up, he's going to be a bit snippy, but that's okay. Got another one. What's up, Rick? Super chat number 2. Thanks for the market updates. You're welcome. You're welcome. So if you learned something today, if you get some value out of this, throw me a super chat. If you don't, throw me a thumbs up if you still like the video. And if you get no value and you don't like me, that's okay too. Just tell me in the comments you don't like what I'm saying or you don't believe me. Thank you. Got 2 super chats. Fantastic. Let's look at some. And if you do a super chat, tell me where you live and I can analyze that area. Oh, you got it. Okay, look, I got Fit and Fab wants Buford, Georgia. Fantastic. I'll get to that. Dan in the dirt. What's up, Dan? I like that truck. Maybe you can pop the hood one day. We can see what's going on under there. Go under the hood, as they say. If rate magically go up 1%, get the most expensive house you can realistically get. I'm not a financial advisor. If rate magically go to 1%, if rate magically go to 1%, oh, if interest rates go to 1%, yeah, I mean, that'd be pretty crazy. They are down. They are down. That's why I called for the refinance. I mean, like the rates dropped from 6.75, 6.8 to Friday or Monday. I think they were 6.53. I called and I got a 6.25 quote on a refi for an investment property, like a non-QM loan. She got her mortgage credit score fixed. We set up with a Kentucky 203K lender. That's great. That's what Dan in the dirt says. She's finally an authorized user on my Capital One credit card, almost ready to buy a house. Well, congratulations. You may be timing it right, Dan. You could be, right? You get maybe a better interest rate. Interest rates are coming down a little bit. Maybe they'll come down more. The next couple of months are going to be really interesting with interest rates. Like the Fed is in a corner, and but the Fed didn't cut rates. And interest rates still came down. So, and maybe prices are lower for you right now. Murfreesboro, Tennessee, you got it. What's up? Oh, sorry. Got this other one. Annie Alexander, what's up? I'm closing on a home at the end of the month. I'm paying them down as quick as possible to buy more. I sold AMD to help pay down my loan. Oh, you sold some stock. Good for you. That's what I assume that means. That's awesome. And to buy more, I'm paying them down as quickly as possible to buy more homes. Good for you. Good for you. Assets are fantastic. You got to hold assets. All right. Dan says 4-cylinder Cummins turbo diesel swap. Wow. Sounds complicated and awesome. That's cool, though. Good stuff. All right. Let me get to this national update. Sorry it took so long. A lot of housekeeping. But I hope you guys like that FHA stuff. I thought it was kind of interesting. And that mortgage or that loan, the foreclosure information. All right. This is the Redfin update for today. Buyers take note. Mortgage rates are falling. Home price growth is cooling. And supply is outpacing demand. All those things are true. Again, depends where you live. And it certainly depends on why you're waiting to buy if you are waiting. So they say Redfin economists say serious home buyers have a window of opportunity to lock in mortgage rate as rates could fluctuate as more economic data is released in the coming weeks. House hunters got some relief this week as the daily average mortgage rate dropped to its lowest level in nearly a year after a softer than expected jobs report. A home buyer on a $3,000 monthly budget can afford a $458,750 home with a 6.55 mortgage rate, roughly the daily average on Wednesday. That buyer has gained roughly $20,000 in purchasing power since mortgage rate hit a recent peak of 7.08% in May. Yeah, I mean, rates have come down. The question is, at what rate do buyers run back into the market? Like, it shocks me that there are people that think that won't happen. Like, it's like, and it goes against everything that they know is true. That's the problem with that narrative. That, hey, people aren't going to start buying again when rates come down because they want lower prices. I'm not saying you don't want lower prices. I'm not saying prices shouldn't be lower. What I'm saying is that consumers don't buy on price. They buy on payment. That's how consumers buy. That's how investors buy many times too, by the way. Like, they're buying on cash flow. Even if the price of the house is higher, if their cash flow makes sense and it's a stable cash flow, like it's not an adjustable rate mortgage, I'll give a higher purchase price to a seller. Sure. I mean, I don't care because I'm probably going to have a mortgage on the property the rest of my life. I probably will. Probably always have debt on the property to be buying other assets. So that's why, should you wait or should you buy now? You have to make that decision yourself, but make no mistake, people, in my opinion, people are going to come into the market when rates come down. We're going to find out soon enough, I think. There are a few other bright spots for house hunters this week. Home price growth is losing steam. That's true. The median U.S. asking price rose just 2.3% year over year during the 4 weeks ending August 3rd, one of the smallest increases in 2 years. So sellers are asking less and less for their homes. Sellers have started pricing lower in response to the buyer's market. So maybe some sellers, hopefully through their agent, a good realtor, is telling them, listen, this isn't 2022. You got to price your home correctly. And if you don't, you're going to let it sit. Redfin economists predict sale prices will fall 1% by the end of the year. Additionally, just about 26.6% of homes are selling above asking price, down from 31% a year ago. So fewer buyers are paying over asking. And that's a good thing, right? That's a good thing. You don't want to be in a bidding war. You don't want that. There are more home sellers than buyers on the market. The total number of homes for sale is up 8.5% year over year, while pending sales are down 1.2%. That sounds great and all, but man, you got to really pay attention to this number. I mean, 8.5. Well, we'll get to it in a minute. That's not good. That's a bad sign if you're a buyer. Many sellers are willing to negotiate. That's true. Redfin agents in many parts of the country, including the Bay Area, Phoenix, Washington, D.C., and coastal Florida, report that a lot of sellers are open to negotiating with buyers. Some are accepting offers under asking price or providing freebies to sweeten the deal, like money for closing cost repairs or to get the home offloaded. And that's what you have to look at. You like this part I love. Home offloaded. Another way to say that is I need to sell. There are people out there that need to sell. You've just got to find them. It's not everybody. It's not widespread pain. And I'm not telling you this because I'm going to give you real data today. It's not just theoretical data. I'll give you real data. I'll also show you how to find a deal if you want. You have to tell me in the comments if you want me to actually go through that at the end. House hunters should keep in mind that the window of opportunity for buyers could be short. New listings have lost steam. That's true. Staying essentially flat year over year as would-be sellers realize they may not get the price they want for their home. Additionally, lower mortgage rates could bring more buyers back in and more competition. Mortgage purchase applications have already increased, rising 2% week over week. So don't have FOMO. Don't look at this data, and you're going to see a lot more propaganda from agents, from the media. If you follow any agents on Facebook or Instagram locally, you're going to get, it's going to be like vomit. You're going to get tons of people saying, better buy now before rates go down. You're going to have a lot more competition. There is probably some truth to that, but it doesn't mean you have to have FOMO. It just means you need to be aware of that factor. Serious home buyers should consider taking the window of opportunity to act fast and lock in a mortgage rate at the lowest level we've seen since last October. Let that sink in. It's the lowest mortgage rate that we've seen since last October. So, like, if you are ready to buy right now and you've already made that decision, the change in mortgage rate shouldn't be enough to make you refi or make you buy, because it's not that big of a difference probably. But it's just like an added bonus if you're already ready to buy. Like, I was already ready to refinance this building that I was mentioning in the beginning of the video. So the extra 0.5% in rate decrease, or quarter point, whatever it was, it's just a bonus. It equals like, I don't know what it was. I looked at it. It was like $60 a month. I mean, it's not going to make a difference to me, really. $60 a month. It's not a very expensive refi, but it's just bonus. In other words, it shouldn't make you buy or make you sell or make you refi, just that little change in rate. But you tell me what you think in the comments, if that little cut is going to make that big of a difference. I think it's more of a psychological thing for buyers, and particularly buyers, right? They're like, rates are lower. I got to get out there and buy before other people do. I think that's what happened during the COVID, right? Money printing or lower rates. Okay, daily average 30-year fixed mortgage rate, 6.57%. That's a 10-month low. Let's check it right now and see what it is. $6.57. Oops. No, let me just go to home. Yeah, $6.57. It came down a point from yesterday. So, I mean, you can see this dip right here in mortgage rates. Right? I mean, you see the big spike, right, in 2022. Kind of went up and down, up and down, up and down. It hit a low here of 6.35, 6.20 back in 2024. I remember that last fall, about this time last year, because I was ready to refi then. I decided not because of rates, but for other reasons. And so then the rates went up pretty substantially, almost to 7 again. But now you can kind of see that drop from 6.97 down to 6.57. So, will rates continue to fall? It's anybody's guess. One thing's for sure, the market now is pricing in like a 95% certainty that there's going to be a Fed rate cut. But the Fed rate cut doesn't necessarily mean that rates will fall, because rates have already fallen, and there was no Fed rate cut yet. So the 10-year Treasury and that Fed rate, completely different. And you just need to be aware of that. So anyway, rates are lower. We know that. Mortgage purchase applications. Yeah, look at this. Up 2% from a week earlier. Now, rates were falling a little bit, but they hadn't had that big drop. So it's really, we probably won't see the effect of these lower rates we're seeing today on what happens next. We probably won't see it for a couple weeks. Up 18% year over year, though. So mortgage purchase applications are up 18% year over year. Now, there are people that are going to tell you that doesn't matter, but you tell me if it matters. Like, I'm not saying all 18% more people are going to get approved or buy a home, because we're not seeing it in the home sales right now. We're not seeing it in the home sales, and we're not seeing it in the pending sales yet. But it's possible there are a bunch of people like me who have applied for, well, I actually haven't applied for the refi yet, but I'm close to doing it. So maybe there's people like me that may apply for the refi or apply for the purchase, but they're not actually pulling the trigger yet. Maybe that's the case. Redfin Home Buyer Demand Index, I don't care about that. Touring activity, up 28% from the start of the year. Last year at this time, it was up 13%. So people were definitely seeing more homes than they were last year. But this is a little, I was thinking of this yesterday, just randomly, like, if it's up 28%, that doesn't necessarily mean that there are 28% more people seeing the same amount of houses that they did last year. There are a lot more homes on the market. So no wonder touring activity is up 28%. They don't tell you that. They don't tell you that. Median sale price, $396,991, up 2.1%, roughly $1,800 shy of the all-time high. So home prices nationally are still up year over year, but they have fallen, $3,000 in the last couple weeks? So that median sale price is starting to drop. Median asking price, $400,000, up just 2.3%. Median monthly mortgage payment, $2,667 at a 6.72%. Look at pending sales. Look at this. 1.2% down. Only 85,000 pending sales. So demand hasn't really come back into the market. There are people buying. 85,528 people put a home in contract. They didn't close on it, but they put it in contract. So there are people buying homes. So if you see like somebody or you hear somebody saying nobody's buying homes, well, demand's lower, but there are people buying homes. I mean, we just heard a couple people on my channel that say they're buying a home. So people are buying. But this is the big problem. This is the biggest problem. If you're a buyer, this is like, a big, big neon warning sign. New listings are sluggish like a wet sponge. Only up 0.4% year over year. Now, to the average person, they're like, well, whatever, that doesn't mean anything. But to a housing nerd, it means a lot. It means that new listings are not exploding. There's not a ton of distress selling. There's not the average home seller right now does not need to sell. The average home owner doesn't need to sell. The pain that we talked about at the beginning of the video of the FHA, the student loans, the foreclosures, it's ticking up. But we're not at a level where the average person, the 1 out of 4 homes like during the GFC were 90 days or more late on their mortgage payment, or 1 out of 4 homes during the GFC, I think, had negative equity. We're not seeing that. And so the economy, the housing market's not bad enough for people to have to list their home and be forced to list their home. There's a few out there. There always will be. And when the student loans really kick in, the payments, the defaults, the FHA moratoriums end, the extend and pretend ends with loans in forbearance, all that monkey business in October. Months after that, you'll probably see more forced selling. Active listings only up 8.5%. I can't believe that. 1,159,790 homes. Like that, it's only 8.5% up, folks. That's nothing. We have no explosion of inventory nationwide. Some markets we have inventory, but you're going to be shocked when you see some of these metros in a few minutes. Some of these metros, you can see the crash of inventory. You can see it. It's plain as day. Like sellers are like, nah, not going to sell this year. And buyers a lot of times are like, man, I want more pain in the market. And sellers are like, I don't have pain yet. Check next year. Months of supply, 3.9. This is up 0.5 points from last year, but now it's under 4 months of supply. Interesting. Median days on market, 40 days. This has climbed a little bit, I think. Anyway, that is the look at leading indicators. Now let's do metro level highlights. Then we'll jump into the actual metro analysis. Median sale price, where it went up the most. Cleveland, 13%. Detroit, 9%. Montgomery County, PA, 7.6%. Warren, Michigan, 6.1%. Nassau County, New York, 6.1%. Up in prices year over year. They're like, hey, crash, hold my beer. I'm just going to keep going here. Ohio's off the hook. It just keeps going. And our median sale price in Columbus is now exceeding Houston, Texas. There's the little county I live in here. Little county where I live in Licking County, Ohio. The prices exceed Houston, Texas. So it's not like it's a cheap market. I mean, it's under the national median, I guess. So in that sense, it's cheap. Oakland, Fort Worth, Jacksonville, Houston, Austin. These are where the prices are down the most year over year. This list really doesn't change very much. Florida, Texas. Pending sales. Where pending sales are up the most. Phoenix leads the pack in pending sales, meaning buyers, more buyers in the market. Why is that? Why would Phoenix have more pending sales than last year? Because prices came down. Prices came down. Rates have come down a little, and there's more inventory on the market. And what happened? More people bought. There are buyers on the sidelines, maybe like you, who want to purchase a home and are waiting for prices to come down. As prices and rates come down, you're going to compete with those people. You're going to compete with investors. 19% of all homes in the U.S. are still purchased by an investor. 19%. In Cleveland, it's 27%. Investors haven't gone anywhere. They're trimming the fat off their portfolios, and there are some investors that made really stupid decisions, really stupid assumptions, took out debt they shouldn't have, didn't know what they were doing, and they got creamed. They'll sell. They'll be forced to sell. But there are a lot of investors that are like, nah, I'm going to hang on to my cash flowing asset and buy another one. Virginia Beach, Virginia, up 8.6%. Austin, up 7.5% in pending sales. Pittsburgh, PA, Championship City, up 7.4%. And Cbus, Columbus, Ohio, up 6.6% near where I live. Prices haven't come down here really at all, but buyers are still very active here in Columbus. I mean, it's not like it was in 2021 or 2022, but people are still buying. Miami, Portland, Tampa, Las Vegas, Orlando. That's where pending sales are falling the most. So buyers in Miami are like, nah, we'll wait till next year. Portland, Tampa, Las Vegas, Orlando, all those are true. The other thing is, if you separate out condos and single family houses, the data looks a lot different. So condo sales are like in the toilet in Miami and in Tampa, probably even in Las Vegas, even probably all these metros, maybe not Portland so much, or maybe they are down in Portland, but condos are taking a beating. And a lot of investors aren't buying condos now because they just don't make sense with the HOA and insurance. New listings, Philadelphia, Cleveland, Montgomery County, PA, Milwaukee, Wisconsin, and Washington, D.C. is where new listings are up the most. Look at where new listings are down the most. Hey, and I don't think he's on right now, but sometimes he watches my channel. Travis at Real Estate Mindset. If you're on or you see this or somebody can get a message to him, and even Melody Wright, I would like them to take a look at new listings. I want them to look at new listings, like just the data, and tell me what they're seeing. Tell us what you're seeing, because I'm seeing many markets where inventory was supposed to explode. I'm seeing new listings falling. That's not good if you're a buyer there. You need more new listings. But I want them to analyze this new listing data. I know Melody tracks like 80 markets, she said, weekly, 80 key markets. And I got to think she tracks new listings. I'd love to get her opinion on that because she knows what she's doing. She's smart. So is Travis. All right. These are the charts. I'm not going to review that. I'm going to go right to the metros now, but I'll look at some comments first. By the way, I disabled the ads in the live stream. I'm looking for 5 super chats. I think I only have 2 right now. So throw me a super chat if you learn anything. Definitely give me a thumbs up. If I hit 5 super chats, I'll bring out the dogs, introduce you to Elaine and Jerry Ferrier. Let me take a look at just some more comments. What's up, Super Tech Boy? Good morning, y'all. Good morning to you. So many people are still... Oh, the other thing about no ads in the live stream. I'm not sure if it's going to affect my views or how much YouTube pushes it out here. So do me a favor and definitely hit the like button. Forward this live stream to somebody you know that may benefit from watching us, because the more people we get involved, obviously the more the channel grows. That's all good stuff. And I'm taking this risk of saying I'm not putting ads on the live stream. Maybe YouTube suppresses the video because, you know, they want money. And as long as I can hit some super chats, I'm good with it. So I just need 3 more. So many people are still in 2.75 and 3.5% interest rates. I can't imagine any real shift unless mortgage rates get within 4.5. That's true. I agree. I actually have data around this. I have data that tells us at what mortgage rate will buyers come back into the market. I don't know if you want to see it or not. I don't want to delay the Metro report anymore, but maybe I'll show it at the end. Tell me in the comments if you want to see that data. I just got it last night from, was it last night? 2 nights ago from Resi Club. You can go to it and look at it though, too. I think it's a free article. Resi Club's fantastic. Okay. I agree with you though, Super Tech Boy. I wonder if there are any stats on first-time buyers versus people who have previously owned. Would be interesting to see if lower interest rate moved the needle on which group. That data I'm referring to may have that. I can't quite remember, but that's a good question. Yeah, people who are locked in at a 275 who bought a home 40% cheaper, they'd be fools to sell their house unless they have to. And that drives a lot of people nuts. People are like, I understand like the fact that they don't like it because they feel probably that they missed out, right? That they missed out on an opportunity at one point. And they'll tell you probably, if they're not honest with themselves, they'll tell you that that's not true, but we all know it is, right? And that's human nature. It is what it is. It's okay. You feel like, oh, shoot, I missed out on lower rates and lower home prices. Now I got to pay a higher rate and a higher home price. And that's why I think a lot of people are angry, Super Tech Boy, that shoot, people aren't forced to sell yet. They don't like the fact that people have 2.75 rates. And then they blame the boomers or whatever and say, they're just hoarding homes. It's like, well, if you had a 2.75% rate and you paid 150 grand per house instead of 250 or 350, wouldn't you keep your home? Or would you just give it up to the populace to be a good person? Come on, man. Right? We're on the same page, Super Tech Boy. Thank you for all the support. Desiree, yes. Thanks for joining us. I will check out. What part of Oklahoma? Got to tell me. So put in the comments, what part of Oklahoma do you want me to review? A city, a county? If it's a small city, put the county in. I wonder how many people from the East and West Coast are moving to Ohio. I've tried to find that data. Very difficult to find any reliable data. Redfin has it, but it gives you the same stats for every city in Ohio. So it doesn't seem to be very accurate. I don't know. That's a great question. Oh, I'm late. I'm starting to lean back in the more pessimistic side. Crash more likely. Jobs report was horrific. Loan defaults are skyrocketing. A recession outside of AI is likely. Yeah, I'm starting to lean back to the more pessimistic side. Understood. I mean, anything's possible, but our inventory levels are so low. Like it's going to take... We only have 1.15 million homes for sale. Leading up to the GFC, forget the GFC, in the year 2000, we had 2 million homes for sale. Now, there's a narrative that we don't need that many homes. There's a narrative that there are people dying, which there always are, that are going to leave their homes and they're just going to be abandoned and left for dead. The homes are, not the people. And like, we don't need that many homes. But my question is, and because I look for properties all the time. I'm always looking for a deal. I'm always looking for a deal for a client or myself, or helping a client find a home. And I'm interacting with y'all. And I hear these people with this narrative online, but nobody's talking about actually buying a home. So if there were a bunch of empty homes on the market that nobody wanted, or that were just sitting there that are just for the taking, right? Like distress, and we didn't need more inventory, why wouldn't everybody on this stream be in a house? Why wouldn't they? There has to be a reason why. The reason why is those homes aren't available. Somebody owns them. You can't just go take them. My point is we need a ton of inventory. During the GFC, we had 4 million homes for sale. Leading up to the GFC in the year 2000, we had 2 million homes for sale. Now we have 1.5 million. I'm sorry, 1.15 million. So a crash could come, but we need like maybe another million homes for sale on the market. Because supply and demand, right? But I understand what you're saying, Tech Ninja, and I respect your opinion. All right, time to go. Time to get on to the data. And for those just joining, give me a thumbs up, share the video. I don't have any ads on the video. And I'm looking for 3 more super chats to hit my goal. And if I can get super chats, I'll keep the ads off the live streams, because I'm really curious if YouTube will suppress this or not. They probably don't like the fact that it's not monetized. Now, I will turn the ads back on after it's done, but if you catch me on the live, no ads. All right. So let's do, well, let's just look at this. This is for Super Tech Boy. Look at active listings right now. Is that seasonality? It don't look like seasonality to me. Well, not seasonality compared to last few years. Like, look at 2024. Look how inventory went up steadily all year long until the end of the year, right? When nobody's listing their home. But look what happened to inventory this year. Started out strong. Like, you had a nice increase. We got all the way up to 1.211 million homes for sale, active homes for sale. That was up 16% year over year. But then look what happened. It started to fall, and we've lost inventory every week since then. Every month since then, right? I guess it's really every week. So look, it's not the end of the world as far as inventory goes. We could definitely have another spike. Something's going to have to cause that spike, though. But we're going to see it there. And first, we're going to see it in the new listings. Look at the new listings. Up 0.4% year over year. That's it. Like, we're not even, like 2022, 124,000 listings hit the market at one time. Right now, 95,000 listings hit the market. If there was a lot of distress with homeowners, they would be listing homes more. If there's a lot of distress with investors, if investors were unloading properties, and if you have to sell, if you are desperate to sell, you're not going to hide your listing. You're going to drop flyers from an airplane. The point is, it's going to show up in the new listing data somewhere. Even if some of the data is fraudulent or manipulated or false, I mean, they can't hide it all. If there were a flood of people wanting to sell their home, it'd be in the new listings. And we'll look at that metro by metro in a minute. So the first metro, let's go ahead and hit Columbus. I always get requests for the C-Bus Columbus, and I'm going to get to the ones that you guys have already requested. Look at new listings in Columbus. Look at this. Up 5.7% year over year. So we've got some more new listings in C-Bus. We need that. You got to see active inventory in C-Bus now. Check this out. Whoops, that's new listing. We don't want that. Active listings. Look at this. Higher for longer, right? Higher for longer. Up 19%. Nationally, we're up 8.5% only in active listings. Active listings in Columbus up 20%. A lot more homes for sale. Now, let's check this out. Homes sold. Look at homes sold. Up 0.2%, but there's definitely a shift upwards. What about pending sales? Look at pending sales. up 6.6%. We're one of the leaders in the nation. Up 6.6%. So more people buying homes in Columbus. Why? Did prices fall? Let's find out. Wow, look at the prices now. 361. Let me see. The peak was 364 in Columbus. Now 352. There's a drop there. Will it continue? I don't know. But sales have picked up because maybe there's more inventory and sellers are making more price cuts. Is it a crash? No. But it's nice to see at least it's not a new record high home price. But I think it's higher than Houston. I think Columbus is higher than Houston now. It's 352 now, right? From 361 to 352. Our peak was 364. It's dropped $12,000. They're not telling you that, right? Let me look at it on a 12-week average. So on a 12-week average, you can't really see the drop as much, right? You can just see kind of a slight downturn there. Let me keep it on the 12 weeks and see how that works for us today. So that is Columbus. Now, median sale price dropped in 11 of the top 50 metros in the U.S. Last week, it was 14 of the top 50 metros. So the number of metros with lower home prices is declining according to Redfin. Meaning that home price decline isn't as pronounced as it was last week, basically. Cincinnati. Let's do that. What do we got in Cincinnati? New listings in Cincinnati up 3.2% year over year. Good. We need more new listings in Cincinnati. Look at pending sales, or that's actually homes sold, not pending sales, up 2.2%. So more people buying homes in Cincinnati than last year, more people listing homes. That's good. Need more activity. Now let's do active listings. What do we got there? Active listings in Cincinnati up 11.86% year over year, 12%, whatever. So we have more active listings, more than the national average at 8.5%, right? So percent growth wise. Median sale price, what do we got there? Look at median sale price, $314,000. It's an all-time high in Cincinnati, Ohio for home prices, up 4% year over year. So Columbus is down, right? I mean, it's not down year over year, but it's falling. The median home price is falling. In Cincinnati, though, it's like, no, we're going to keep going. All right, Cleveland is next. Whoops. That's Cleveland, Mississippi, Jay. Come on. All right, sorry about that. Cleveland, Ohio. New listings in Cleveland, Ohio, up 5.6% year over year. More new listings. Good. Need that. Definitely need that. Let me go to active listings. Look at active listings in Cleveland, up 15.49%. We need that. We need more people, more homes on the market, more people listing homes. Homes sold, down 1.1%. How are pending sales? Only up 2.2%. So, like, inventory is growing, but demand, it doesn't look like it doesn't look like more and more people are buying homes in Cleveland. Let's look. 544 homes sold. How many new listings? 688. So they gained, what's that? 120 or so listings in Cleveland, right? Homes sold, basically, or I guess new listings minus homes sold. Median sale price in Cleveland. Look at this. $259,000, up 9% year over year. That's an all-time high in Cleveland. And a lot of other areas in Ohio are facing the same fate right now. Prices are higher, even though inventory is growing. A lot of times it's because the inventory that is growing is not great inventory. All right. And by the way, I have an Ohio-only channel. I encourage you to check that one out if you care about Ohio real estate. Hey, look at this. Got a super chat. Fantastic. Thanks, David. Looking to buy in New Braunfels, Texas. Did I say that right? New Braunfels in December. Potentially cash if sub 250. Options on the market there. Should I wait and rent further into 2026 for a better deal or just offer below asking in December? Well, David, first off, thanks so much for the super chat. That was really cool of you. I think I've got 3 now. So thank you. Seriously. All right. Let's look at New Braunfels, Texas. What county is that in? Let me look it up. It's Comel County, it sounds like. Where is that? I'm just looking at a map. I'm always kind of curious on where these places are located. Oh, it's up near San Antonio, huh? What kind of home are you what kind of house are you looking at? Is it is it like a condo or is it a home? Are you looking, is it an investment? Excuse me. That's probably the wrong thing to do. I'm on the porch. There's probably tons of pollen. Is it an investment or maybe a house you live in? I guess because you say rent. Okay. Let's look at some data. Comel County. So first I'm going to go to the metro and see if I can find New Braunfels. Is that how you say it? No, that's not in here. It's probably too small. So I'm going to go to the county. Comel County. Comel County, Texas. New listings in Comel County, Texas. Wow, look at that. That's crazy. Outside of San Antonio, right? I assumed that you'd have a ton more new listings. New listings are down 2.6%. So stay with me. Stay with me, David, on this. So you've got fewer people basically than last year listing their homes for sale. That generally means that people aren't as desperate in the market as maybe you would need them to be to get to just pick something off the MLS and get a lower price. Doesn't mean you can't get a lower price. It just means it may be a little more challenging because people aren't rushing to list their home right now compared to last year. And in fact, like you only have 105 new listings. I mean, last year you had 107. 2022, you had 130. So it's not like that's abnormal, I guess. In 2023, you had 96. So you've got a few more than you did in 2023. Let me look at active listings now. So active listings are up 12%. You've got 2,100 homes on the market. Last year, you had 1,800. So you've got a few more homes, 100 and some. So, a little over 100 new homes on the market compared to last year. 100 more. Easy for me to say. Let's look at median days on market. This is how long homes are sitting on the market. Okay. So the first 2 stats I looked at, new listings and active listings, told me that those aren't good signs as a buyer. You've got active listings that are falling. You've got new listings that are falling. Yeah, I mean, active listings are they plateaued and now they're falling. And so you've got inventory isn't really that impressive. But this stat is a good sign for you. It says that the median days on market is 79 days. It's up 16 days year over year. So homes are taking 16 days longer to sell than they did last year. And that means that there are people on the market who have listed their house that haven't sold it for some reason. The price is too high. It's in an area maybe people don't want, or the house is in bad shape, right? It's got problems with it. It's got gremlins. I guess that's what I call it, a gremlin, where it's either a roof, it's windows. Usually it's not windows. It's like a roof, a foundation a lot of times, or it stinks. Like you walk in and it smells. Or you walk in and like it needs a new kitchen and bathroom, or maybe it has mold in it. All those things, or termites. Termites are pretty big down there, I think. So all those things could be cause of concern, and that's why buyers may not be buying the homes. But there are a good amount of homes, it looks like right now, that are sitting on the market longer. Let's look at weeks of supply and see what we find. Yeah, so like weeks of supply is elevated, meaning there's 30 weeks of supply right now. So that's nearly 7 months, right? No, I'm sorry. It's about 4. Why I can't do that math in my head, I don't know. It's about 4 months of supply. I got excited at 7. So it's about 4 months of supply. That's like considered in some regard, a balanced market. So it's not like it was down here. Like down here, look at this. You only have 13 weeks of supply, which is only like 2.5 months. That means sellers are in control. That's not right. Let me look at this again. Man, no, it's 7.5 months of supply. I'm right. 7.5 months of supply. Sorry, guys. Brain fart. 7.5 months of supply. That's a lot. Like over 6 is a strong buyer's market. So they're saying right now in Comel County, Texas, it's a strong buyer's market, even though active listings are stagnant and new listings are falling because you've got a lot of supply, not a lot of demand. I didn't even look at homes sold or pending sales. Where are those? Yeah, look at pending sales down 4.6% year over year. So the moral of this story is what I'm seeing, and let me look at median sale price really quick, which really won't matter that much. I mean, median sale price is up 1% to $432,000. So you should be able to find, I think, something on the market that's been on the market a while. And because it's been on the market a while, and the seller can't sell it for whatever reason, they may even be stubborn. That may be your opportunity. So you ask if you can potentially cash if it's a sub $250,000 home. I don't know if you should wait to buy. I can't tell you that exactly. And I don't know if you should rent further into 2026, but I can tell you if you have a targeted price and a budget in mind that you understand is a low debt to income ratio amount, like in the low 20s. So you're not spending 40% of your income on a mortgage. You're spending like 23% of your income on a mortgage. That is a good sign that that you understand affordability. And if you can find an opportunity like that of a seller that needs to sell and has their home on the market for a while, make a low offer. You just put on here, or just offer below asking in December. I would definitely offer below asking. And I would offer below asking on multiple homes, not at once, but try it on one home. If the person says no, put them in a tickler file, like a follow-up list, go to the next home, make a low offer. No, follow-up, no, follow-up, no, follow-up. And keep doing that over and over again with the homes you like. Eventually, somebody will play ball. You'll send in a low offer and they'll go, well, I want 300 for my home. You offered me 240. That's kind of low. How about 260? Boom. You've got them. Once they come down from that asking price that far to like a 260 number when they're asking 300, then you know you have them because they've come down before you even really negotiated. And you can always do something like, no, 240. That's the price I already gave you your price. It's 240. They don't like that. Go to the next home. Come back to that person and offer them 235. I know people that do that. They'll come back with a lower offer than the first offer, basically a signal saying, I'm not playing around here. I'm not giving you the price you want. I'm giving you this price. If you don't want that, I'll just go find something else. You've got to be emotionally detached from that home. So that's your answer. That's a long answer, but I hope it helped. And you gave me a super chat, so I have no problem spending that money. That's time. And you spent the money. I have no problem spending that time. Okay. I hope that helped, David. But I would get with a realtor there, really dial in the data I just did, rewatch this part, ask them for the new listings, the active listings, but ask them for the data with a realtor in that market. Ask them for the specific area you want to buy, like down to the zip code or the school district or the subdivision, and then ask them for the data in the type of house you want and the price point you want to buy in. Don't look at homes that are 500 grand, because that's what we just did. We looked at the whole market, but you want to look at just homes in your price range. I can't do that on Redfin. or I would for you. So that's what a realtor will have to do. So get with a realtor and get that data, and it won't cost you anything. It shouldn't anyway. I'd be surprised if it did. If it does cost you something, find somebody else to work with. All right. Thank you. Thank you, David, for all that. And thank you for the super chat again. All right. Fit and Fab. You want Buford, Georgia? You got it. That was an exciting one, the last one, for me anyway. Oh, I don't think that's in here. Did I spell it right? I'm a bad speller. Yeah, I spelled it right. Let me look at the county. Gwinnett County, right? That's what we're looking at. Gwinnett County, Georgia. Oh, I have a metro here. Gwinnett. Let's look at new listings. Now, let me go back to the chat here and see if I can find you Fit and Fab. By the way, I like the name. Yes, I'm going to do it right now. So tell me just a little bit more, like if you just want me to analyze the market, I can, or if there's a specific situation that you want me to look at, like what we just got, with what we just looked at, like in Texas. Like, hey, I'm buying a home for this price range, or this is my strategy, or whatever. Look at new listings in Buford, Georgia, or Gwinnett County, Georgia. That's the info I have. Again, Fit and Fab, same drill or same advice at the end there. Get with a realtor who can give you the data in the exact part of Buford you want to buy in, because the different parts of the city, obviously, you know this, are going to be different price points and different markets, right? And now I'm looking at a county level. That's kind of a 10, maybe a 20,000 foot view. So you want to make sure you dial in where exactly you're wanting to play ball, and then get the realtor to give you the data on that area in your price point. 301 new listings hitting the market. That's down 10% year over year. That's insane. Like, I can't believe there aren't more people listing homes for sale. It's crazy. It's completely different than what I think a lot of people thought would happen. It's surprising me. It is. Active listings. Okay, well, look at this. You do have more active listings, 21% more. Last year, you had about 3,000. This year, you got 3,700. So, got 700 more homes for sale in the county. That's good. Good stuff. Let's look at that median days on market again. Well, first, let's look at demand. Demand is, look at homes sold. Yeah, look at homes sold, down 5.9%. So you have fewer people listing homes, but you have fewer buyers in the market. Now, remember, there are a lot of buyers out there that are going to think, Fit and Fab, that you should wait on a crash. Like, there are people that are waiting on a crash. They waited on the last crash, and then it crashed, and then they crashed out because they didn't buy anything. But now they're like, hey, I'm going to wait again. So there are probably buyers out there that are still on the sidelines because of unaffordability, or because they're just waiting on a crash. And so that's when you can strike and you can find a deal no one else is looking for. So down 5.9% in homes sold. Not a lot of people buying homes there compared to last year anyway. Let's look at median days on market. Median days on market. What do we got? Median days on market. Up 16 days. I mean, this trend I'm definitely seeing in a lot of areas. 42 days. Oh, and by the way, if you are out there looking at a property and you see your median days on market is 42 days, and median is the one in the middle, right? And again, you want to get with a realtor locally to triple check this data for where you want to buy and the type of house and the price point. But look at the median days on market and then set your search past the median days. In other words, and you can't do this on Zillow really. You can like manually do it, Redfin may be easier to do, but look at properties once they hit 45 days, once they hit 60 days. If homes on the median is selling at 42, forget about them underneath 42 days. Don't even look at them. Just give yourself permission to ignore them. Look at the homes that are on the market longer than the median. That'll give you a signal that those people may want to sell. And I would also look at ones that have been on the market a while with no price cuts, because a lot of buyers will skip those thinking that person's not reasonable. They don't want to play ball because their price hasn't come down. Well, you never know until you make an offer. So this tells me there's homes sitting on the market right now in Gwinnett County, Georgia, that are not selling, and they're just rotting on the market, I call it. Let me just see if you have any other info for us. No debt, no debt, $200,000 income household. Want to stay under $350 for a first home. Oh, you're looking for a first home. That's cool. By the way, good job having an idea on how much you want to stay under, or that you want to stay under. And it's great that you have no debt. Fantastic. Good for you. See, there are people out there that are prepared or want to buy, and they've got their life together and they've got their finances together. That does happen, contrary to popular belief by some people. So median days on market, we know that's up. That's good for you. Let's look at weeks of supply. Okay, now weeks of supply is still up at 16. It's not 30 like we saw. So that's 4 months of supply. 16 is 4 months. I got that right this time. I didn't need to use a calculator. I couldn't believe I needed to do that. But 4 months of supply is not bad. I mean, it's kind of a balanced market overall. It means the buyers and sellers are kind of like at an equilibrium. So it's not like it was in Comel County, Texas, but it's certainly better than it was back in 2023 when it was only 11 weeks of supply, which is what, 2.5 months, 2.7 months of supply. So you've got a little more buyer power. Buyers are a little more in control than they were a couple years ago. Let's look at price. Now, the median sale price doesn't mean a whole lot. If you're looking countywide, it's kind of a very broad look. $434,000 down 1%. And you want to buy in the 350, below 350, you said. I'm sure it's possible there. I'm sure it is. But like, let me go back to, did I look at active inventory? Yeah. Let me go back to active inventory and look. So I don't know how long you've been looking fit and fab, but like if you go back to 2023 and look, at this time of year, you had 2,700 homes for sale. Now you've got 3,700 homes. So you've got another 1,000 homes for sale than you did in 2023. That's good. It's good growth. You probably need more. The new listings have fallen off. That's not a good sign. So my strategy, yeah, that's not good. Down 10%. You're at like a 4-year low right now in new listings. So look, I don't know how much of a rush you're in. I don't know if you're like, I want to buy a house this year, but I would get with a realtor to find that data in the specific area you want to buy. Look at homes that have been on the market a while. Once you're ready to like pull the trigger, look for those homes that have been on the market a while, make them that low offer. And if you don't need to buy right now, I mean, inventory could fall. This is for everybody. Inventory could fall in your market if rates come down more and buyers come back into the market. That is a risk. I'm not saying it's not. But if you're not desperate to buy right now, then take your time and find an opportunity. And so there's going to be distress. I would also, if you're a first-time buyer, I don't know what type of loan you're using, look at a 203K loan. If you have the flexibility to do that, look at, and this is for David too, right? Was it David? Yeah, I believe so. In Comel County, Texas, look for a duplex maybe where you can live in one side, rent out the other. That's not a bad idea either. I'm not saying you have to do that, but Look at areas and do things that others are unwilling to do. Look off market. Look off market. Here, I'll show you this. Look at this. I'm diverting here. This is a list of available properties from a wholesaler in Columbus. So a wholesaler is basically somebody who sells a purchase contract on a home. So they've agreed to buy a home from somebody, a homeowner, and this wholesaler then puts the house under contract and then goes out and sells that contract to oftentimes an investor, but it doesn't have to be. It could be a owner occupant. And so these are oftentimes sold at discounts. And this is a list in just Columbus from one wholesaler. And there are wholesalers probably in your markets, wherever you are, depending on your state laws and local laws. There are probably wholesalers out there operating behind the scenes, taking properties off the market and putting them in contract, and people are buying them, and you never see them on the MLS. These are potential opportunities if you're flexible and willing to do work. A lot of them need rehab. A lot of them have tenants in them, so you got to kind of deal with the tenant until they move out and then clean the place up. But they all represent opportunities. I'm not going to go through them all, or I'm just wanted to show you that there are ways to buy a property not using the MLS. You need to understand the process with the wholesaler. You need to probably connect with a real estate attorney or even a realtor to help you with this and do some research on the property, certainly, but they represent opportunities that you're just not going to find on the MLS. I mean, and I have purchased properties to flip and to buy and hold from wholesalers. So I just want to show you that. That does exist. Wholesalers. Just Google wholesalers in your city and you'll find them, and then you just get on their email list and they'll start sending you deals. Anyway, I thought that was maybe something you want to look at. But yeah, same advice as the last guy. Like, find that price point, find the data in your market, make disrespectful offers, follow up. Make an offer 1 week, swoop back in 3 weeks later. If it's still in the market, make the offer again. Heck, if it comes off the market, like it's canceled or expired, but it hasn't sold yet, you can still make them an offer. No law against that. I heard a story from somebody a couple weeks ago who made 80 offers on properties before they found a deal. They made 80 offers. How many of you are willing to do that type of work? If you are, you can find a deal. And they did. They found an amazing opportunity, like deal of a lifetime, but they made 80 offers to get there. So get with a realtor that's willing to do that work with you, and you'll knock it out of the park. You got no debt. You got good income. I think you're ready to roll, Fit and Fab. What's up, Rick? I think most boomers no longer have a mortgage. Most people bought their retirement homes. I'm looking to upgrade location for my retirement home. Oh, cool. Yeah, 40% of homeowners have no mortgage. During the, leading up to the GFC, it was like 30%. So 40% of homeowners, according to the U.S. Census, I think, don't have a mortgage. So your instincts are right. All right, let me get to another one here. Buford, Georgia, Super Tech Boy, David. All right, I got 4 super chats. I need one more to hit my goal. Somebody else wanted this one. Murfreesboro, Tennessee, Kyle Rooney. What's up, Kyle? Yeah, I'll go ahead and do Murfreesboro. Probably too small of a market. I'm going to have to look at the county. Rutherford County. And I'm going to give you another tip here in a minute on how to find an off-market property. I'm going to show you exactly how I do it. Because, I'm just trying to educate you and give you some ways other than sitting on your couch looking at Zillow or looking at an MLS. Rutherford County. Rutherford County, Tennessee. New listings. What do we got? Where is that, by the way? Oh, okay. Near Davidson County. New listings, let's see, down 6.2%. It's crazy. So far, these markets we look at, except Ohio, new listings are down. And these are just random counties, right? I'm not cherry picking these. Like, where's the distress? Like, where are these people that have to sell their home? And they're probably out there somewhere, a small portion of them, but it ain't like they're all over the place. Obviously. Active listings. What do we got in actives? Up 14, call it 15% year over year. So you got more homes for sale. That's good. Last year you had 1,447 homes. Now you got 1,662 homes. So another couple hundred homes about. Not a ton, but more. At least you don't have fewer homes for sale, or that wouldn't be good. Let's look at median days on market. Same as the other ones, right? A lot more, 53 days. 53 days on market, up 15 days year over year. So last year it was 38 days. Wow, look at back in 2022, it was 12 days. That's quick. That's when there was no time to make a decision. That was the worst market to be in as a realtor or a buyer, sometimes even a seller, because you got to wonder even if these buyers even went in to see the house. People just send you offers. It would hit the market and you'd have offers in hours. And you're like, man, I didn't even receive any showing requests for my client. How did you see the house? We didn't. We're just making an offer. That's not a very good offer. That was crazy times. But now 53 days, you got time to make a decision. I'm sensing the strategy should be the same as the other folks, right? A lot of days on market. You've got more inventory. Let's look at weeks of supply. What do we got? 15.2. So that's a little over 4 months of supply. Not 7 like David had, but at least it's not down here at 8 weeks of supply, which is 2 months, which is basically a strong buyer's market at that point. Like, buyers are completely in control. Now, at least, you buyers have some control because, you can see inventory is up. Did I do homes sold? Can't remember. No, I didn't do homes sold. Yeah, so homes sold down 2.6%. That's why you're seeing, so new listings are down. People aren't adding to the market in Rutherford County, Tennessee, but homes sold are down too. So as long as that home sold stays lower and demand doesn't run back into the market because of lower rates or something, there's probably a window of opportunity to pick something off the market or, find something, even on the MLS. But like, if buyers run back in and there's no supply there, that's not going to be good in any market. Nationally, in Rutherford County, in Columbus. I'm not saying that's going to happen. If economic pain really hits the housing, really hits the economy, job loss, all that stuff, then you could see an issue where people have to sell their home and buyers can't buy at all. But right now, credit's pretty loose. Like, there aren't credit restrictions really. I mean, there obviously are restrictions, but I don't sense that that lending practices in the U.S. are like stringent. They seem to be loose. If that continues, that'll just give us more demand if rates drop, unfortunately. So anyway, homes sold down, more inventory, things are sitting on the market. Let's look at median sale price. $437,000. Wow, that's expensive. Up, what's that? 1% year over year. So prices haven't crashed there. They came down from the peak. Look at the peak back early in the year, $444,000. And then they came all the way down to 421, now all the way up to 437. So they're lower than they started the year. But look at last year, the end of last year, they spiked. They went up. I wonder why. I wonder what happened to inventory. Let's look at new listings again. Well, new listings didn't really rise that much. They did in 2022, though. I'm just trying to find a reason why that spike in home prices. Well, inventory, well, maybe because there were more homes for sale then. Back at the end of last year, there were more homes for sale. Like that, you can see that line go up, though it wasn't like an extreme amount. But prices did go up at the end of last year and the beginning of the year, and then they fell, right? But if you look at this year, the point is, it doesn't look like it's crashing. The prices aren't crashing. So I wouldn't, in other words, if the house has been on the market 3 days, you're probably not going to get some kind of like discounted deal, right? You got to wait for distress. So in other words, pick off properties that have been listed for a while, or get with a wholesaler like I showed you just a couple minutes ago, right? Find a wholesaler that wants to sell their list like this. If you just joined us or if you're late in the party, this is my list of properties that one particular wholesaler is unloading in Columbus. These are all off market. Some of them have been listed before, by the way. They even have duplexes on here. Look at this. This 1885 through 1887 South Washington Avenue. Then they give you a link for pictures, right? So you can actually look at the pictures of the property. Anyway, just another way to skin the cat, right? Okay. People still say that? That's kind of old school. All right. Hopefully that helped, Kyle. Hopefully it did. All right. Let me see what else I got. Got that super chat. I just need one more super chat to keep me from putting ads on here. I got 4, right? 1, 2, maybe I only have 3. 3, 4. I got 4. Yeah, exactly. Jason's dog treat fund. I'll bring out the dogs, show you Elaine and Jerry real quick. I'll wake Jerry up. He's an angry little guy when you wake him up, but he may even bite me. But I'll bring them out and introduce you to the dogs. They're kind of, everybody likes dogs. Well, a lot of people like dogs. 4 super chats, right? I'm just trying to look at any other request. Sorry if I miss one. I did that one. Okay, somebody asked for Oklahoma. Desiree, you asked for Oklahoma earlier. I don't know. Did you tell me where in Oklahoma? I don't think you did. If you did, I can't find it. I'm not going to look for it anymore. So you're going to have to tell me again, and I'll come back to it. Somebody asked for Arizona. This guy asked, some dude, should I rent or buy a house in PA? Man, I don't know. That's a hard question to answer. It really depends on, yeah, there's a ton of factors there, right? Like, do you want a house? Do you want to, do you even want to live in a house with the maintenance and the upkeep? What type of house do you want? What's your budget? What's your financial situation? Like, how long do you want to be there? Tons of different questions there. You know what I would do? This is just a public service announcement. Go onto Real Estate Mindset's YouTube channel. He has a link for a free home buying course. I've taken the course. I didn't go through the whole course. I kind of just perused it, but it's good. And I don't have one. And so it's free. I guess like Home Buying 101. And he offers it at no charge. So I would go onto his site and understand how to buy a home. And then that may help you make that decision. Reno, Nevada. Yes, I can check Reno, Nevada. Reno, Nevada. So I've got 61 people on right now. That's not horrible, but I want to see if YouTube will suppress this video because I'm not doing monetization on it. And so far, it looks like it's okay. And tell me in the comments, do you think that's a benefit that I'm not putting ads on and it's uninterrupted? Maybe it doesn't matter to people. Maybe people are okay with ads. 176 new listings for Reno, Nevada, up just 0.1% with new listings. These new listings, folks, this is a big problem. This is a big issue. Like, we may have already had our spike in inventory for the year. May have already had it. May have seen it. And we've had some price declines in some markets. Maybe we saw the price declines already. Active listings in Reno, Nevada, up 28%. 2,268 homes for sale. Last year, you had 1,766. So another 500 or so homes. Not bad. Let's look at weeks of, well, let me look at homes sold next. Homes sold up 5.5% year over year. This is like the trend you don't want to see if you want a crash or lower prices. Is that new listings are only up 0.1%, but homes sold are up 5.5%. That's 131 homes that were sold. Let me just check the numbers. And then new listings, okay, you have 176 new listings. So it's not like you had fewer new listings than you actually took off the market, right? It's not like people bought more than people added. That would be really bad. But you only really netted like 20 homes in inventory. That's not great. But let's look at median days on market. What do we get there? What do we got? A median days on market. 47 days, up 10 days. Like the other market, houses are definitely sitting longer in Reno. Good. Probably find an opportunity. Let's look at weeks of supply. Yeah, look at weeks of supply. 17.5. So a little over 4, right? Yeah, a little over 4 months. So it's basically a balanced market in Reno. That's what I see. Balanced market from a weeks of supply standpoint. Obviously, depending on your price point, where you're living, what your situation is, all that stuff. Let's look at median sale price now. Look at median sale price down a little bit, down 0%, basically flat. 574. Man, Reno is expensive. Reno is expensive compared to what's Vegas like? Probably, I got some on my face. Vegas is probably like, what, 400? I guess we'll do that next. But man, Reno, Nevada, 574. And you started the year at 562. So it's more expensive right now, median sale price wise, at 574. So it hasn't crashed in Reno. So you're just going to have to, I mean, it seems like it's balanced in the market. You're going to have to be strategic on the MLS, definitely look off market, look at some expired listings. Those are definitely tactics. And I'm going to tell you again, near the end, I'll show you guys how I find opportunities beyond the wholesaler, how I just find them on my own. It's pretty simple. So I'll show you that here in a few minutes. All right. That is Reno, Nevada. Scooby and Daphne. Oh, there's 2 dogs. Cool. Bexar. Is that County, Texas? Is that what that is? I'm guessing. Is that what you're saying? Bexar County, Texas? Let me look at that. That's a relatively big county, right? Bexar County, Texas. I try to say it like a Texan, but I'm horrible at that. What in the world? Look at... It's crazy. New listings in Bexar County down 6.4%. What in the what? What in the what? I'm just curious where. Okay, so that is San Antonio, right? That's the whole city of San Antonio, basically. New listings down 6.4%. I mean, that just makes it's completely surprising that that's what's going on. And it's not like it's just 1 week, like an anomaly. It's been going down like it. You really had the same new listings as last year all through the spring, and then they just fell off the map. So you had 659 new listings hit the market. Homes sold are down to 461. So you still added a couple hundred houses to the market. So all hope's not lost. It's just disappointing to see new listings continue to fall. But you're down 7.6% with homes sold. People are not buying. That could mean there's an opportunity there. There was somebody on the channel, I don't know if he still comes on or not, but he was selling a home in a condo in San Antonio. And I'm wondering if he was actually successful at it. Because he was struggling selling the condo, if I remember right. I don't remember his name. And he was like, I'm having a hard time selling this thing. I keep dropping the price, and I'm wondering if he ever sold it. But I'm guessing there are, for the most part, the sentiment of buyers is bad time to buy in San Antonio. Like, I want to buy. I don't want to, bad time to buy. But maybe now is a good time because a lot of buyers aren't buying. And maybe sellers are like bummed out that they're not getting the love that they thought they would right on the listing. It's a different market, folks, all over the place. I mean, unless your home is amazing and priced exactly correctly, even if it's overpriced and it's amazing in the right location, it'll still get multiple offers sometimes. But for the most part, we're not seeing that. And you're not getting tons of showings like you would a few years ago. Active listings only up 7% in Bexar County. 7%, that's it, versus last year. Last year, you had 9,700 homes for sale. This year, you've got 10,492 homes for sale. So another 1,000 homes, I guess, something like that. Net median days on market. Same thing, 58 days. We see this in those other markets, up 11 days year over year, and that's going up. So the homes that are on the market sound like they've been sitting there a while. You could pick one off. Again, set your search. Tell your realtor, say, give me my MLS feed. You could ask them what the average days on market is. Sometimes it's better to look at the average days on market, combined days on market, not the median, but the average. And then if pretend it's 58, is that what the realtor tells you? Tell them, I don't want to see any homes unless they've been on the market past 60 days. And then look at what that feed or that list looks like. If you're like, man, there's nothing here past 60 days. This is all junk. Well, maybe you want to bring it down some. But if you see a lot of homes at 60 days, maybe you take it up to 75 or 90 days. And then you're like, man, I'm just going to wait for the homes to sit on the market a long time. Then I'm going to go in and make an offer. A low offer, right? Make a disrespectful offer. Okay. Median days on market there. Now let's look at median sale price. Median sale price, $304,000. So, yeah, like Central Ohio was more expensive than Bexar County, Texas. That's crazy. That's up 3% year over year. Not up a ton, but it's definitely up. I mean, but you're off from the peak. Look at the peak back in 2022 with prices. 350. Let me get the date right. 314 grand. So you're at 304. So it's kind of like Columbus, right? Where you're down a little bit from the peak, but it doesn't look like it's crashing. And it's headed straight up. Look at the median sale price skyrocket in 2022 at the beginning of the year. Well, I guess in like February, yeah. But then it fell big time. right, in 2022. And then it kept falling all the way to 290 in 2023. Why? Because you had a ton of inventory hit the market. Look at active listings. Yeah, look at active listings in 2022. This is a textbook example of what happens when inventory increases. And it goes along with the fact and truth that it's all about supply and demand. So you can see that inventory skyrocketing in 2022. And then what happened to prices? Prices fell off the map, way down, because there was a flood of inventory. So just like this in any other market, it's going to be the same story. So when we see these areas where inventory is only up like 8%, 5%, flat, new listings aren't growing, that keeps the chance that median sale price is going to drop, kind of keeps it bracketed. Just supply and demand, right? That's all it is. It's like toilet paper. Remember when people wanted toilet paper during COVID? They were like paying any amount and buying tons of it. The buying demand was nuts because there was no supply. Then all of a sudden, people don't care about it because there's tons of supply, and people are like, "Oh, we're going to be able to get supply. We're okay." It's the same thing with houses. That's just the hard truth. That's Bexar County, Texas. Doesn't look like it's crashing. All right, what else I got? I like that one. I still don't have my 5th super chat. What the heck? I'm going to have to turn these ads back on. I don't want to do that. Mark R. Peace and love and happiness. Hey, all. Good day to you too, sir. Oop, I got a super chat. David, you don't have to give me another one, bro. That was really nice of you, though, man. One more for the pups. When should I start activate with my agent? Oops, sorry. I'm trying to click on it. Oh, here we go. One more for the pups. When should I start to activate with an agent if the target move date is December at the earliest? I currently live in another state. If the target move date is December at the earliest, I mean, I would activate now. Like I would look now. And so I don't know where you're going to move to. I guess I do know, but if you need an agent in Comel County, Texas, then you could send me a email in my description. You'll see an email address. Send me an email, David, and I can, if you need help with this, if you don't, that's fine. I can get you some names of somebody in that market that is a good realtor. I have a network like that I've helped some other folks who have contacted me with that info. And so I would say as soon as possible, you want to have that conversation, and a good realtor is going to want that conversation early. They're going to want to say, what are you looking for? What's your situation? Let me help you now get prepared. So I think the earlier, the better. Don't pay them anything yet. Don't pay them anything. And they may ask you to sign a buyer agreement, but if you're just engaging them on the phone, I'm not sure you need to do that. In fact, you should probably interview at least 2 or 3 agents, and now's the time to do that. Interview them over the phone and ask them, tell them your situation and find out what type of vibe you have with these agents. And you're going to find one that you like and that works with you. That's not like standoffish, that returns a call, that type of stuff. Maybe interview 4 or 5. But I would definitely take that home buying course I mentioned from Real Estate Mindset. I would do that ASAP. And then engage an agent out there in the area you want to buy in and have a conversation with them as to what you're looking for and your plan. And I would think if I would, as an agent, I appreciate that when somebody gives me a heads up. They're not like, hey, I need to find a home in 30 days. It's like, oh man, like we don't have any options. You want options. So engage them early. Great question. And thank you again for the super chat. Okay. The dog's got to come out. So, I'm just going to. All right. David, very nice of you. Very generous. The crash is in pricing. $500,000 homes are done. Okay. 250 to 350,000 is super high demand. Terrestrial rates don't matter at 6.5%. Okay. I'm going to get back to this comment. All right, time to show you the dogs. So I got two dogs. One is Jerry, and one is Elaine. So I'm going to flip the camera around because they're kind of rambunctious, and you can see Jerry and Elaine. So let me do this. That's Elaine. She's a poodle, a medium-sized poodle. What's up, Elaine? And she's a good dog. And then you've got Jerry. Now, Jerry's a Chihuahua, and he is not a good dog. Are you? Are you a good dog? Hey, here. Jerry, here. I'm trying to get Jerry to come out. Hey, Jerry. There he is. They're going to fight over the treat. So Jerry is not a great dog. He's the Chihuahua, and then Elaine is a good dog. She's the poodle. And Jerry doesn't get up from a nap unless he is required to. So that's the crew. Thank you for allowing me to show that to you. Probably people are like, I don't want to see that, but it's my channel, so I can do what I do. And thank you, David, for pushing that over the top. Okay, let me get back to this question because this is a great question. A great comment. Bam Bam Music. Great comment. The crash is in pricing. 500K homes are done. I agree. The crash is in, there are a lot of homes that are too expensive, and the luxury homes are sitting in many situations. But there are a lot of situations where that's not happening. There are a lot of situations where big, expensive homes are moving. I mean, but overall, you're right. $250,000 to $350,000 homes, that affordable price range is in very high demand. Great comment. But the property taxes don't drop with the prices. Well, if your home is appraised on a, well, for some part, right, you're right. They don't, Richie Dog. Like, you'd have to wait for that reappraisal 3 years or 6 years once prices drop. And I did a historical look at property taxes. They did come down during the GFC somewhat, but not as much as you would think. So your home price drops 30%, but your taxes don't drop 30%. In fact, there's a lot of areas where they put an emergency measure in with property taxes to, juice the local municipality because they lost tax revenue because real estate values went down. So you're right, Richie Dog. They don't drop all the time with prices. It's kind of sad. Appreciate the info. I appreciate you, David, and you're welcome. Yeah, stars the show, right? The dog, star of the show. Thank you for allowing me to show that to you. Lower rates coming, better get ready. Buyers better get ready. Yeah. I mean, you have to run the numbers. Like, if you think rates are low and you're like, oh, now's the time to buy, run the numbers and look at the real difference. Like a quarter of a point may not make that big of a difference to you in payment. It may just be psychological, right? Like, oh, I'm getting a better rate. I'm not paying 7, I'm paying 6.5. So it may not be mount to a hill of beans. Sheriff, our 16-month-old shepherd. Ah, I love it. That's awesome. Yeah, I like dogs. Yep, dogs are nice. They are. You can always have your taxes reassessed, Super Tech Boy says, if prices have dropped. That's true, you can, but we all know how that goes, right? With fighting the county on reassessments. My point is, I wouldn't bank on lower property taxes. A significant drop in property tax bills because your value of your home drops. I just wouldn't. 33 likes with 63 here. That's only 52%. Hey, of chatters hitting the like button. Come on, hit the like button. Thank you. I appreciate the help. Let me look here. Can you do anything good with 100K? Like buying a house? I mean, even in Ohio, you're not it's very challenging to find something under 100K. Like that you can live in. Certainly if you want to flip it, those days are gone. Like the first house I flipped, I bought in 2018. I paid $12,000 for it. I put $25,000 in it and sold it for, what did we sell it for? $65,000, $70,000. So somebody got a house at 70,000, under 100 grand, but very hard. Numerous listings. What's up, McConaughey? Numerous listings posted under sold price of last year, then removed because there's still 25,000 over house for sale next door. Yes, agreed. I agree with you. This happens. People take them off the market, then they put them back on. But if somebody's in distress and they need to sell, not just want to sell, man, you're going to see them drop that price to a point at which it's undeniable, like it's going to work, right? So I promised you that I would show you this. This is how I find opportunities. I'll give you this secret sauce here. Now, this is simple, but it's not easy. Meaning it takes a lot of work and you go through some pain before you actually are successful with this. But this is a program I use called Poropstream, and it does cost money. There's actually a link in my description below for it. But like, here's Houston, Texas, right? And if I'm using a program like Poropstream, I think it's like I want to say it's like $115 a month, and it gives you the whole U.S. Like I was checking out the Reventure app, and I thought maybe I'll subscribe to it, but you only get one zip code for $40 a month. I was like, man, what in the world? Like, this is not a great value for $40 a month. And he just uses Zillow data, and then he has a forecast in there. I don't want an algorithm forecast. I want the raw data. I mean, the forecasted number is kind of like just an opinion, and it could change. It's like, no, I want the raw data. Anyway, this is Houston, Texas. And if I go here, I can filter on pre-foreclosure properties. And it doesn't matter if it's a non-disclosure state or not. You don't need access to the MLS, actually, to find this info. If you want to look at days on market for a specific area, I don't think this program has it. I think you still need that realtor. But if you're looking for distressed properties, if you're looking for an off-market deal, this may be how to find it. So I searched in here for pre-foreclosures, and there's 1,895 properties in Houston, Texas that are pre-foreclosure. And I can do other things too. I can sort and say, all right, I want to know that, but I also want to know how many are, I also want to know how many are tax delinquent. So I did pre-foreclosure, and then I can go to liens, and I want to say include. So there's 282 homes, not on the market, just 282 homes in Texas that are pre-foreclosures and have a tax lien. And then they list them, and they tell you where they are. And they give you an estimated value, obviously, just like Zillow would. Like this one, for instance. I don't even know what this one is, but it's 12515 Gotham Drive in Texas. Houston, Texas. 4-bed, 2-bath, 1,900 square feet, built in 1971. And it gives you the owner's name, and it gives you the mailing address of the owner. And so what I do is I'll either use a list like this, or I'll drive around an area of Columbus or where I live, and I will write down addresses of homes that I'm interested in looking at. Sometimes I look for homes that are distressed, right? Like, oh, the roof has a tarp on it. There's weeds in the yard. They have holiday decorations up and it's July. That type of distress. Like you're like, maybe they forgot about the home or it's empty. Go by it, drive by homes at night, no lights on. It's Saturday night. And then you don't see the lights on in the next week. You're like, maybe that's a vacant house. You can you'll start to get a spidey sense of these vacant houses or just a house that needs help. And you send crews, or maybe his name is Norberto, his first name. Yeah, Norberto Cruz. So I would send him a letter, and this is the letter I send. Can you see this letter? Oh, shit. You guys couldn't see it. See this letter? Do I send this? Can you see it? I send this letter to the people who are maybe distressed. And it just says, this is my name. I'm Jason. I want to talk to you about buying a home or buying your house. If you're interested, give me a call or shoot me a text. And then I leave my number. And as an agent, I have to disclose that I'm a realtor. So I put that on there too. That's all. And I send these, I call them yellow letters. I send them out to these distressed homeowners. And you'd be surprised the calls you get back. People, and especially if you're looking for a house to live in, they'll be definitely apt to call you. So in your letter, you can put, I live in the area, or I'm looking for a house to live in. I'm not an investor. You can put that, unless you are an investor, then you don't want to lie to them. And just throw the lines in the water and see what you get. But that's a way to do things that other people are never thinking of doing. And they're too lazy to do. Most people are way too lazy to do that work. But because you couldn't see it because I didn't share the screen yet, and that's my fault. This is the house that I found in Texas, Gotham Drive, right? Now, there are 282 more properties that have a tax lien and a pre-foreclosure notice in Houston. I mean, I can go to another market and do the same thing. I can go to, well, Comel County, Texas. Let's see if there's any there. Now, in Comel County, smaller market, only 3 properties meet that filter. Only 3 properties. So that's not that many, right? That's kind of like where I live. There's just not that much distress, and we don't have a huge market. So only 3 properties, but there's still ones that you could probably, call and not call, but send a letter to. If I take off this filter, let me take off liens and see what happens. Now there's 41. So I've got 41 pre-foreclosures in Comel County, Texas for David, right? You can kind of see, here's one right here. Let's look at this one. Not 9004 Pocahontas Spring Branch, Texas, 78070. 3-bed, 2-bath, 1,400 square feet. They're saying the estimated value is $172,000. Now, look at this. Aha. Look, this is great stuff to show you. Look at the mailing address. It's not the same as the actual property. That's why this program is fantastic. Even in a non-disclosure state like Texas, where some people will tell you can't find the data unless you have MLS. Incorrect. I just found it. So this guy, Harris Snowden, he lives at Kilgore Street. This could be a rental for all we know. We don't know. It was on the MLS. What happened? Oh, it's on the MLS right now. Look at this. 6/30/2025. Great opportunity for investors or owner financing, okay? With a competitive offer and down payment. Oh, it's a mobile home. Huh. I don't know. They're all over the place, right? They got all kinds of opportunities here. So that's one, right? And then you could go and look at another one maybe real quick. Let's see. And there's like, here's one for $1 million. What's up with this one? This is in a trust, but it has a pre-foreclosure. Here's the pre-foreclosure detail. Look at this. It was filed in 9/9/2024. Notice of default. So somebody is having a problem making the payment, right? And then you can even look at the mortgage and transaction history. to see what's happened with the property. It'll even give you comparables and nearby listings. Even does this for you. So I don't know if any of y'all subscribe to that Reventure app, but like it is more money. This one's more money, but it gives you the entire US, it gives you any city you want, and it tells you pre-foreclosures. There's tons of filters on here on this program. Like, look at these filters. I can look at auctions, divorces, people with high equity, pre-probate, right? People that may have passed away, but their house isn't in probate yet. Upside down, people who are upside down on their property. Vacant. They're vacant homes. Tax delinquency. There are a lot of those. Tired landlords. On the market. You can slice and dice this any way you want and build a list of people addresses to send my letter to and see what you can find. That was, hopefully that helped you understand kind of what investors do and what you can do to find your house. You don't have to. This is how I would find a property. If I had to move, didn't matter where. I don't care if it was New York City, Los Angeles, doesn't matter. This is how I would find an opportunity. I would not use the MLS. I would use the MLS, but I would more heavily rely on this. But that's that point. I think I got another super chat. I did. MJ, what's up, MJ? Thank you. Hey, Jason, how's Salt Lake City looking these days? We're listing next week. We're in South Jordan, south of Salt Lake City. Okay, South Jordan, huh? I don't know if that's in here, but let me look. So I may have to go to, I'm just going to, let me look at what county that is, South Jordan. Oh, it's in Salt Lake County. That's not helping me. Let me do this next thing here. Let me go to the monthly data because this may dive into it a little more. And by the way, really appreciate the super chat, MJ. Let's see. Is it South Jordan? Look, South Jordan, Utah. Here we go. Let me see how many home sales there are. This would kind of give us an idea. 101. Okay, good. So there's some data here. All right. So for FYI, you can go to the monthly data for Redfin. I usually use the weekly data. It's a little more like updated. This is just for the month. And the monthly data, like they only update this at the kind of middle part of every month. So this is for, actually, they don't even have July in here yet. So it's just through June. But this will give us an idea of what you're talking about. And is it a home that you're listing, MJ, or is it a condo? I'm guessing it's a home. Let me see if I can separate this. I don't know if it'll give us enough data here, but let's find out. So, all right. So I just separated it into single family houses. You can do that on this, which is pretty cool. But if your market's really, really small, this filter really won't work. So let's just keep it a single family house unless you tell me otherwise, MJ. And let's see. New listings in South Jordan, Utah. 104 hit the market in June. That's how many. Now let's look at the value. Let's look at the month over month value. That's down from June 20%. I'm sorry, down from May 20%. So fewer new listings than May, but that fluctuation happens a lot because you only have 100 homes or so that are hitting the market. 3.6% increase in active homes for sale or inventory. Let me look at the value. Oh, that's month over month. Let me look at year over year. Year over year, up 28% in active homes for sale. Single family homes in South Jordan, Utah. That would tell me you definitely have some competition compared to last year. They're up 28%. Let's look at the value, though, of homes for sale. 262. Last month you had 253. Last year you had 204. So you've got another 60 homes for sale this year. So yeah, there are more homes, and then that's more competition for you. You're not a buyer, right? You're a seller, unless you're buying too. But I would say you definitely need to price it right. I mean, I'm sure you're a realtor, or I'm sure you figured that out. You're going to have to price it right, probably. Like, don't get greedy. The idea of starting high when you know it's too high and saying, I'll list it high and then see if anybody bites, and then I'll come down. Unless you want to play that game and waste your time, is usually not a good idea. It usually ends up being a lower price at the end of the day than if you just started at a market price. Let's look at months of supply. 3.9 months of supply. So you're basically a balanced market. That's what that means. Let me just double check and make sure you're not using you're not doing a condo. You're not doing a condo, are you? Yes, home with, oh, here we go. Yes, home in South Jordan with 3/4 of an acre. Nice. Are you buying too? I'm just curious. You hear that most people are buying if they're selling. I'm curious what you're doing. 3.9 months of supply. So last year, what'd you have? 2.8. So you've got another month of supply, basically. It means that buyers have kind of gained more control of South Jordan versus last year. That's what that really means. It's a month more of supply. If you didn't sell any more, if you didn't add any more homes on the market, current supply in South Jordan would last 3.9 months. That's what this means. Didn't add any more homes at the current demand pace, you'd sell out of homes in 3.9 months. But that's pretty theoretical, right? Okay, now let's look at days on market. Median days on market, 39. Last year, you were at 36. So homes are sitting 3 days longer. It's really not that long. I mean, that's kind of like normal. Look back in 2012. Look at the days on market in 2012. Well, it's February. Let me get through apples and apples. Yeah, look at that. 120 back in 2012. So when people go, hey, the crash will be here next week, like I'm telling you, we're going to see massive price decreases and a flood of inventory in the next month. It's like maybe something could happen. I mean, you can't say never, but like, I mean, homes were sitting on the market in your area 120 days back in 2012. Like that's when we were coming out of the GFC. And then look what happened. That decreased significantly, but then it shot up in 2022. Why? Because you added a lot of inventory during that time, like a lot of people did. And now it's kind of been range bound, I guess. But it's really not that long, 39 days. So if you price it right, you should be fine. You should be fine. I'm sure you know all this, but if you're selling a house, make sure it's clean. Clean doesn't cost you anything. It's just elbow grease. Clean the outside, clean the inside, pick up all the clutter, get rid of all the toys. I don't know if you have kids or not, but get rid of all the toys, get rid of all the, or put it in the basement or the garage or something. The less clutter in the house, the better. Make sure your lighting is good. You have all LED lights that are working in the home. The light really helps. If you've got like old incandescent bulbs, I don't know if people even buy those anymore. Take those out and put LEDs in. If you can, get your house to smell good. If you're a smoker, don't smoke in the house while you have it listed. If you have dogs, don't try to hide the dogs. People will know you have dogs, and that's okay. But try to get the house smelling good, clean it, price it right, set your expectation correctly with your realtor. And yeah, and I think you'll be fine. Let's look at this sale to list price ratio for you. 99.2. So on average, in South Jordan for single family houses, you're getting about 99.2% of list price, of asking price. So expect that you're going to get some low offers. Expect that. You may get some people taking shots lower than what you expect, right? Or what you want. But realize that homes aren't selling on average over asking. On average. Let's look at sold above list. 22%. So 22% of homes sold above list. Nationally, it's like 26%. So there are still 22% of people paying over asking for homes there. I mean, you could price it to a point at which it incites a bidding war or multiple offers at least. Like if you were going to price it at 500 and instead you price it at like 485. Somebody who's looking for a home with 3/4 of an acre in your area in South Jordan for your type of home may look at that 485 where other homes are priced at 500 and go, 485. That's a good price. And they go out there and other buyers go out there. And next thing you know, you end up with an offer at 501 or 502. Whereas if you listed it at 500, you may get offers at like 495, 493, 496. And so you could end up with a higher sale price if you price it lower. Anyway, that's what I'm seeing in South Jordan. Let me look at the sale price. We didn't even look at that. Median sale price. 763. Wow. Salt Lake is expensive. It's expensive out there. Prices have gone parabolic. Right? Look at this price back in 2012. So, like in 2012, there were people, I know people who did this, were like, man, that's crazy. I'm not paying $272,000. That's highway robbery. Well, prices, look what they did. And then look at COVID. Like literally when COVID hit, 470 when COVID hit. That's crazy. That's a crazy increase. 470,000. COVID hits us in March, right? February, March 2020. And it was just like up, way up. I mean, right there, 490 in August of 2020. Somebody hit the fire alarm, was like, we need to buy, we need to pay anything. And it immediately from August of 2020 at 490 all the way up to November of 2021, or I guess the beginning of 2022, 743 grand. Then look what happened. Look at this. Boom. It dropped through the bottom down to 640 from 763 because inventory shot up, right? If we look at inventory during that time, look at the inventory change right here. If I look at it on a year-to-year basis, look at that. Boom, the inventory just exploded. And when inventory exploded, median sale price fell through the map. Look at that, down 13% in January of 2023. It took some time, right, for the prices to come down because it doesn't happen on the same day. But make no mistake, like more inventory will change that price, and it changed it a lot in South Jordan, Utah. I don't know. I find that stuff fascinating, how the market moves. Like 272, and now the grim reality of 763. Goodness gracious. So you're going to need, like, in that market, you would have to have a ton of homes on the market, a ton, exponentially more than you have now, probably. And you need them quickly, like you saw in 2022, to cause a price crash. Maybe we saw our price crash. What if that's the case? What if you look at the long history of the housing market and we've already seen the crash? It kind of came and went in the middle of the night. because the inventory spiked, and now inventory's falling in a lot of cases. Let me just look at inventory again. 357. I can't remember which one I look at. There's one. Okay, this is what I want to look at. Inventory. Inventory is different than active. Inventory is actually how many homes are on the market at the end of the month. I think the active listings in the monthly count is like a blended average of how many homes are on the market at any one time in the market in that month. So that was probably confusing, but that's how Redfin does it, according to their economists that I email sometimes. Okay, I hope that helped. That was fun. That was a cool analysis. South Jordan, Utah. Man, homes are expensive there, bro. Let's see, what do we got? I'm just looking for some comments. I don't have a lot of trolls on my channel. A lot of people seem to be pretty cool. I guess in a way, I'm kind of disappointed. I thought when I got into this, I'd have a lot more trolling. Loving Two Limes. How you doing? Good to see you. Coming in late. Love your streams, but I always seem to miss alerts. That's okay. Yeah, people say YouTube, will do that. Maybe they didn't alert you because I had the monetization turned off. Look at this guy. Zach 911. I got 500,000 in cash, but anything decent in East Sacramento, Folsom area is 750. That's an expensive market. Yeah. I mean, there's another method to buy a home there. I'm not saying you should, Zach. You may even say you want to buy a home. The other option out there is to do like a combo loan with seller financing. So you could buy a house where you bring cash to the table, then you get a loan from a bank to pay the balance of their mortgage off, and then you get seller financing to cover the difference. And then you put money down. Well, that's the cash you put down. So in other words, it's like, and then you blend the rate. So you could get seller financing on a property that's like, pretend it's 500,000 and they owe, let's say 300,000. Well, you could go out and get a loan from a bank for the 300,000. And then you have a $200,000 gap. You could get seller financing, ask the seller, hey, I'll pay your loan off, but I need 150 grand in seller financing at a 2% interest rate. Then you put 50,000 in cash of your own out. I just made that up off the top of my head, but that is a scenario that is out there if you're creative enough. And sometimes by doing that, the deal makes more sense than having a lower price. It just depends on your strategy. But those opportunities exist. But you have a lot of cash on the sidelines. You probably have it all invested in like gold or Ethereum or Bitcoin, and you're just cashing checks. Maybe even just have it in a 4% money market. Who knows? Ohio here. I agree, 65 and over. Oh, you said something about Ohio. Let's find out what you said. Super Tech Boy. They're trying to abolish property taxes in Ohio. That's true. Not sure it will pass. It may not. But I believe homeowners over 65 should be exempt from property taxes. It's going to be interesting. I think it actually will pass, but I don't know how they're going to implement it. They're going to have a year to implement the property tax changes. If they abolish them, it'll be interesting to see how they deal with it. It could be worse. It could make it worse for people, not better. I'm not saying it will, but and I want it on the ballot. So I do. That's why I've talked about it so much. I do want it on the ballot, but for people to decide. But who knows what happens with the implementation of it? They have to get the revenue from somewhere. I ran a scenario using ChatGPT asking if property taxes, if they would, or how much income tax and sales tax needed to go up in order to make the gap in property tax. So there's $24 billion a year that Ohio collects in property taxes. there's $24 billion a year that Ohio collects in property taxes. To get that gap, to get that money, you would have to raise sales tax to like 14%. The problem is that Ohio has a cap of like 8.5% on as a law. That's the amount. That's the top end of sales tax they can charge. So there's not enough room unless they change the law of property taxes in Ohio. And so like Mitch Vexler with Travis at Real Estate Mindset, that's his kind of idea, is we need to repeal the property tax to replace it with with a universal sales tax increase. But every state's different. And if Ohio has a cap, I got to imagine other areas have a cap. And he said sales tax would have to go to like 15%. Then they would normalize it like 11% after some time. But again, Ohio has a cap. So we couldn't hit the cap, or we would hit the cap and we wouldn't have enough room because taxes are already at like 6.5%, 7.5%. So there's really no revenue to get there. Income tax would have to go up a lot. I don't know. I don't know where the money's going to come from. But great comment there. Coming in late. I saw that. You always miss alerts. You asked something. Hang on. Super Tech Boy, I agree. 65 and over. I have a feeling it isn't going to happen. I hope I'm wrong. You mean the abolishment? It'll be interesting to see. Infrastructure is what's making homes unaffordable. Ordinances in major cities make high cost lots. Thus, the house price must absorb. Planning department requirements have gotten crazy, too expensive. I agree, Bam Bam. Like, there are areas where, I mean, it's not a good situation here with Intel. It's not at all. And there are areas where they're building data centers, Amazon warehouses, Intel facilities, where the government's like, we'll go ahead and do that and give you tax breaks to do that. But a developer can't build affordable housing there. They're like, no, you're not putting a housing development in. Even though we need affordable housing, we need smaller homes. The planning departments are like, no, but we'll put a data center there or an Intel facility that'll be half constructed, and then they run away from us, and all the owners around the area are left holding the bag. They'll do that, but they won't put a housing development in. Nah, won't do that. I agree with you. It's all bass backwards. Appraisals driving prices up to get more taxes. Overpriced Summit County, Ohio market. Yeah, but really it's the price people are willing to pay, right, Christine? And thank you for joining us. That's the sad part. It's not sad. It's just the way it is. People are willing to pay these prices. I mean, we got who's this cat? We got MJ, who's listing his house in Salt Lake City. Well, it looks like the median sale price there is $760,000. Back in 2012, it was $260,000, $272,000. Somebody's willing to pay this price. Somebody's willing to give MJ that money. There's a buyer out there for him. So as long as people keep paying the prices, the values will go up. I don't know that now, I'm not saying all the assessors and all the auditors do their jobs completely the way they should. I'm not saying there's not fraud there. What I am saying is, as home prices go up and people pay more and more for homes, that's going to drive the pricing of the taxes. But you're right. It all comes down to appraisals. So, hey, you're welcome. Thank you, Mark R. Peace and love, happiness. Thank you for everything. Oh, you're buying in Ohio. Cool. Hey, good for you. That's fantastic. Moving from Salt Lake, or it's just like a second home. That's awesome. Hey, welcome to the Buckeye State. If you need help finding a home in Ohio, let me know. Guys, it's all about pricing right now. Massive demand for $250,000 to $350,000 home. Average demand for $900,000. New families have nothing to buy. It's pricing issue, not a rate issue. It's an overall affordability issue, right? Like if you're a family that's like, hey, I'm going to be in my home for 15 years or 20 years, then the higher price may not be like a big issue for you. It may just be the monthly payment. By the way, if they reduce property taxes or get rid of them, home prices in Ohio will probably go up because all of a sudden your payment goes a lot further. Like the lowering of interest rates we've seen recently has increased buyer purchasing power. I just read by like $20,000. So I'm not disagreeing that lower prices are better than lower rates sometimes, but that's not how consumers buy. Average demand. Yeah, the demand's in the 250s. If you're flipping a home, flipping that affordable range, you'll sell it. And that's what people need. I need the market to stay stable. We are wanting to sell this fall. Yeah. I think you had told us that, Love and Two Limes. Yeah. And if you need help or you need some data, I think you're out in Plain City. Is that right? Union County, maybe. I'm trying to remember the area you're from. Riverdale. Is that right? Did I say that right? Let me know if you need help there. And I'm happy to see if I can give you some data. Prices are too high in Salt Lake for local incomes. Yeah, they are. They are. What's up, Cody? Total price issue everywhere is overpriced. Americans need to stop paying more than 25% of their household income towards housing. If you have student loans, car payment, or both, you're done for. Yeah, I mean, the good news is they're not giving loans to people with stated incomes anymore. That's one of the reasons why you're not seeing the demise like we did in 2008, because loans are much more strict now. I don't think you're going to qualify for a loan if you have that type of debt, right? But Cody's right. Like, you need to really watch that debt to income ratio. The crash came and went. Now low rates. I haven't heard anybody talk about, like, say it like that. That's a great, that's actually not a bad title for a video. I haven't heard many people admit this. Like, did we already see our crash for now? I mean, again, you look at the timeline of a real estate market, it's really long, right? It's forever. And you look at that timeline and you see that downward trend in 2008. Then you see it go up. Then COVID, it went up a lot. Then 2022 went down slightly, but went down fast. And now back up. Like, one could say that that downward trend was our moment, right? I don't know if that's true, but to EBUTUOY, YouTube. That's great. I like that. It took me a second. See, I got it. So YouTube, you're right. That could be one of the things. I'm not saying that's the way it is, but it's a good theory. Just as good a theory is it's going to crash, right? Amen, Cody. Yeah, total price issue everywhere. You're welcome. California transplants. Average household income is 77 grand. Where did you get that info? Are you using the Fred data or the Census Bureau data for that? Cody, I'm just curious. That's $4,800 a month before home insurance, utilities, food, car payment, and car insurance. I see this stat. I hear people argue about this, but go back. Like, let's look at MJ. He came from California and bought a $700,000 home. Now, I don't know what MJ does for a living. I don't know how much money he makes. He could be a billionaire for all I know. But people have been buying, like, debt to income ratio, or I'm sorry, price to earning ratio, price of home versus the household income has always been lopsided, hasn't it? Like, I know it's more lopsided than ever right now, but it's always been lopsided. Like, home prices have never been a 1-to-1 ratio that I know of. So I guess my point is, there's got to be people, if the average household income is 77, or the median household income, which can be worse, is 77,000, the combined household income, there's people out there, households like we had earlier from Fit and Fab. She's buying in Georgia, and her household income is 200 grand. So, like, the people that are making the 77 grand, they can't afford a home. But there are people above that bracket that can afford a home. But maybe I'm looking at that wrong, but, like, you think about it from a California standpoint. California's always been lopsided in price to earning ratio. Well, people still buy homes in California. They do. And so it's like, I don't know. I know people measure and a lot of YouTubers like lean on that median household income. But first, I wonder where they get that data. Is it from the same people that they say are frauds? Like a lot of people say that the labor market is full of frauds, but that's from the same people, the government, that puts out the median household income. So is that number a fraud? Maybe it's higher. And then this number two, there are people outside of that bracket that obviously can't afford a home, and price to earning ratio has always been out of whack. So I don't know. That's when I think about it, I go, because I want to know, how can these people afford a house, a $350,000 house on 77 grand? That ain't gonna work. Like you just pointed out, Cody. Unless you don't buy anything and you live like a hermit on ramen noodles every day. Even then it may be challenging because you have taxes, right? 77,000 isn't what you're taking home. You're taking home like 55 or 60 or something. Well, that's not who's buying a home then. So maybe you can tell me what you think. So you're left with $2,800. Americans are toast with $2,800. Yeah, like in that bracket, yeah. So people outside that bracket are buying. I'm convinced more than ever you need if you just have a 9-to-5 job and you're trying to enter the housing market for the first time and you're unwilling to do like a house hack, if you're unwilling to look for an off-market deal like I showed you earlier, if you're unwilling to do a rehab project, if you're unwilling to be patient, you're going to have, even if you are, you may have to find a second gig. You may have to find a side hustle to get the income you need. What's up, Tony Mac? Return of the Mac. That's not true, Jason. Okay. You just need jobs to disappear. Oh, but then you need inventory, right? Like if there's still no homes on the market, which there would be from job loss. So to your point, you're correct. That's kind of the spark, right? Is massive job loss. And then you would have people needing to sell their homes. And that's when it materializes in the housing market. All I'm pointing to is you'll see it in the new listings and in the inventory. That's all. That's when you know it's real and that people really need to sell. But you're right. It starts with job loss. Cody, you're spot on. My wife and I have been saving for 3 years to buy a home. We could take our savings and put it for a 10% down payment, then pay $1,000 in interest on a mortgage, or we can just keep getting interest on savings. Yeah, there's nothing wrong with that. That's maybe a good plan. The other option is, people don't want to hear this, but the other option is, and you usually make great comments, McConaughey, but think about that house hack thing on buying a duplex or a triplex or a quad. It's not always what people want to do, but it's a great way to get into real estate because then you can take, and then you're having somebody help pay your mortgage for you. Sometimes all of it, depending on what you buy. You buy a quad, a fourplex, or a triplex. It's going to be a nightmare at the beginning. It won't be fun. You'll be like, why did I do this? But eventually it could work out really well. I always encourage people to do that or find something that needs a 203K loan or just keep doing what you're doing. Nothing wrong with renting at all. Nothing. Renting can be really fun and easy. And you could put your money towards other things. I'm at the point where I'd rather have it make me compounding interest rather than have interest working against me. That's the housing market is actually competing with. I agree. There's a lot of Gen Z and Gen Alpha that are like, I don't want a house. I'm just going to keep buying Bitcoin. Okay, fine. That's fine. But again, so will that translate into a lot of extra inventory? Maybe. We haven't seen it yet. If the dollars weren't so mismanaged by local and state governments, they wouldn't have to figure out where to make up the property taxes. I agree. Yeah. I spoke to somebody recently and they told they had to remain anonymous, but I spoke to somebody who was involved in municipality taxes and tax collection. And they confirmed that they wasted money big time. But I think a lot of businesses waste money. I don't think we'll ever get rid of that. Not as long as humans are involved. Mismanaging dollars. Yeah, they definitely are. Do we need a huge stadium, like state-of-the-art stadium to play football in? No. It's still blocking and tackling. Back in my day, I can say that now, I'm old enough. Back in my day, I played on a field where half the end zone was cinders because it was a cinder track. And they had these stands that were just stands with wooden seats, right? Not that big of a deal. And they, and you would get tackled in the end zone, or I would make a tackle. I played defense, and you'd land in cinders. Now they have turf fields. My son played football, and he doesn't play on a non-turf field all year. Everything's a turf field. State of the art. Do they need that? No. I don't think so. It looks nice, but do they need it? No. The crash is not over, okay? Corporate investors are pulling out to hedge their losses and rebuy at the real bottom, then get the appreciation that will make up for their losses and actually cash flow. Well, 19% of all homes are still bought by investors. In Cleveland, it's 27%. So investors are still buying. They are selling somewhat, but I think there are a lot of investors that are doing well with rentals. They're not buying as much, but nobody is. So you're right about that, Cody. Mod Deuce, what's up? Largest part of the property tax is for schools. If property taxes are abolished, schools will put it on a separate school levy each ballot. Probably they're going to find out a way to get it, and I think schools should be funded. And I'm sure you think that services should be funded. I like our firefighters. I love our library. The Columbus Zoo is fantastic. One of the best zoos in the country. But I don't like it tied to the value of my home on an unrealized gain. That'd be like taxing your Bitcoin if you didn't sell it. They just went in and said, oh, that Bitcoin's gone up in price, give it to me. Or taxing your gold. If you have any gold like stashed away in a basement, it's like, you can't tax that. Give me a break. What a disaster in New Albany. If you've worked around corporate America at all, especially in the sales department, and you hear the words, if we can't find more customers, we're going to cancel the project. That is upper management telling the company, we're going to cancel the project. That's what they're saying. Because you see, the narrative started out with, things aren't really doing that well. We may have to delay the project to open. Then it went to, we're definitely delaying the project to open. Then it moved to, and for those that don't know, we're talking about the Intel Gigafactory in Licking County. It's like 10 minutes from me, this factory. $28 billion. At one point, it was supposed to be $100 billion. It's supposed to bring 3,500 permanent jobs here, 12,000 construction worker jobs, and it was supposed to be one of the largest semiconductor plants in the world. Well, it looks like it may be canceled at this point, but the narrative went to delay, confirmed delay, delay more, confirmed further delay. Now they're sliding in the piece of, if we can't find the customers, we are going to cancel the project. By the way, that makes complete sense. If there's no customers, you can't build. That's why home builders, by the way, new home builders aren't building homes anymore. They've dialed back 27% fewer starts right now on new homes because the demand's not there. So they're not going to build new homes. There's no lumber being built or being bought out there in the market. Like the guy I follow, uneducated economist, he talks about lumber supply. Nobody's buying lumber. So the demand for microchips, same thing. Not where they thought it would be or for whatever chip they're making there. And the new CEO comes in and he's looking at the balance sheet going and the profit and loss going, what's this project in Ohio? What is this? Oh, that's for our new whatever chip. Oh, do we sell those yet? No. Canceled. And it's just a line item on a spreadsheet to him. He could care less about the people in Licking County. He's the CEO of a multi-billion-dollar company. He just doesn't have time for that, which is understandable. But it should never have been started. And Ohio gave them everything. And by the way, do you hear anyone like Bernie Moreno, J.D. Vance, Troy Balderson? Any of these dudes, do they talk about the Intel plant now? Nope. Nope. They're like, missing in action because they could care less too. And so it's Jim Jordan, completely useless. They're not. They have no skin in the game. They could care less what happens. They probably profited off of it. I mean, and then now the deal's going to get canceled, and all those homeowners over there who lived in these houses, these farmhouses for 100 years, their families for hundreds of years, are going to be just left holding the bag if this thing gets pulled. Anyway, it's really sad, but you got to keep going. Sorry, that was my rant about Intel. People overpay for houses. You got a lot to say, Cody. I love it. People overpay for houses while having 10K in credit card debt. Yeah. Any form of economic correction would kill the taxpayer, and we're back to 2008. Yeah, I mean, there's definitely trouble brewing. I showed at the beginning, student loans, FHA delinquencies, buy now, pay later. That's kind of a gremlin out there. Auto loans. I've helped a lot of buyers look for houses, and they can't afford to actually pay the moving expenses. And I always tell them and give them the advice, you shouldn't be buying a home probably. If you can't afford to move, if you can't afford the closing costs, you shouldn't be buying a home. Same but different, right? I think it'll be a different type of, when it does crash, which eventually it will, it's a cycle, it'll be a different type of crash we're not even thinking about. Oh, that's it. New California Hills. I couldn't remember the name of it because I had never heard of it, honestly. Like, I know that area pretty well, but just New California Hills I hadn't heard of. So anyway, if I can help you at all, let me know. Someone finally spoke about taxes. It's price, rate, taxes, and insurance, each a super important piece of the pie. Agreed. It is a super important piece of the pie. All of that. Yeah, taxes are killers, right? In fact, here, you guys are so attentive, and I appreciate it. I'm going to show you this. I was going to show you commissions. Like, there's a report out on commissions and what buyers think and sellers think of agents and commissions, and at what they also have an article Resi Club does that shows us what percentage of buyers would come back into the market at what price point. But because we're talking about property taxes, let me show you this. You're going to love this. Hang on one second. Give me a second. Sorry. What in the world? Here, let me just go to Resi. So this is Resi Club. I'm just looking for this article that I found a while back about taxes because it's pretty interesting. Where is it? Where is it? Where is it? Where is it? Is it in May? No, it wasn't in May. Did he take it off? There was a great map. It showed you like property tax rates by area. Shoot. I don't see it. Born in state. Ah, here it is. I got it. Here we go. So this is the median annual property taxes paid by county. Here we go. Check this out. And let me know in the comments what you think of the fact that I turned ads off. Is that better viewing experience? Does it matter? I know they're doing side-by-side ads now. So maybe it's not as, annoying as I think it is. but I'm just trying to give a better viewing experience for y'all. So I decided, hey, I'm going to turn off ads and see how this goes. And you were nice enough today to give me 5 super chats. So if you guys keep giving me super chats on these lives, I'll keep ads off. As long as YouTube will show my videos to people, which we'll find out if they will. And then I will turn the ads back on when this is published. So if you're on the live stream, you don't get an ad. Yeah. So look, this is, I mean, again, Resi Club is like, this guy has it going on. Lance Lambert is fantastic. So like where I live in Licking County, Ohio, median annual property taxes in Licking County, Ohio, $3,150. Effective property tax rate 1.26%, which isn't that bad actually. But the median home value they have is $250. Right now it's $350. This is kind of old. That 2023 median home price is not accurate for Licking County, but they're a little behind. But still, that's the property tax rate. But if I go up to like Cleveland, Cuyahoga County, 2% property tax rate. Right, darker the more expensive. So the darker areas are where all the taxes are. So look at this. Sussex County, New Jersey, tax rate is 2.47. Median annual property taxes paid $8,462, but that's only on a value of $342,000. Santa Clara County, California. Oh, this is going by median paid by county. Hold on. Let me go to this. Here we go. This is the tax rate. This is where the tax rates are the highest, not where people pay the highest median payment, because that takes into account home values. This is just pure property tax rate. So look at Illinois. It's all blue. So to your point, Robin, those are property taxes, right? That's where they're the highest. So it's got every county in here. I mean, look at New York. Property taxes there are ridiculous. 2.28%, 2.59%. I wonder what the highest rate in the country is. Here's one at 3. Camden County, New Jersey, 3%. Wow. That's high. Texas is high too, though, right? Well, it can be high. Bexar County, Texas. We just talked about that today. Rate is 1.18%. Median annual property taxes, $429,000. Wow. That's a lot. Look at this one county in New Mexico. McKinley County, New Mexico. It kind of stands out from all the other ones. Taxes paid 0.67. Oh, no, I'm sorry. 1.89%. But a lot of the West is not bad as far as property taxes. Even Florida isn't bad as far as the rates go. 0.75, 0.74, 0.88, Palm Beach County, Miami-Dade County, 0.83. So you look at the map, it's, if you overlaid this with inventory, that'd be really interesting. Homes for sale. Generally speaking, this Gulf, Texas, West, that's where all the inventory is right now, generally speaking. And the Midwest and Northeast have lower amounts of inventory, but the taxes are the highest. Like Ohio is becoming like not affordable. Like Delaware County, Ohio, median annual property taxes paid $6,896. That's a lot for Ohio. Franklin County, where Columbus is, $4,000. Right? We already looked at Licking County. Hamilton County, where Cincinnati is, 1.53%. Median annual payment, $3,461,000. But that's on a median household. That's on a median home value of $225,000. Now it's $315,000. So that's why we're having the problems we're having in Ohio. I mean, Iowa's expensive. South Dakota's got some taxes to it. Look at Kansas. Kansas is expensive too with property taxes. Montana, Flathead County. I just did that interview on my channel with Stephanie Thompson from Flathead County, Montana. Their home values went up 90% in 6 years. And 1 year, they went up 46% in 1 year in this county. Tax rate 0.61, not horrible. But, on what is that? On $467,000, it's still $2,800 a month. So that's the property tax look. Banks holding on to foreclosure so they don't flood and crash the market. I don't know, Super Tech Boy. You really think that's happening? Like, why wouldn't they sell them if they could? Are you saying keeping foreclosures from happening? They're not holding them in inventory. They're trying to get rid of them, obviously. That's not what you're saying, right? I see local mortgage lenders qualifying up to 35% of monthly income. Oh, yeah, absolutely. Oh, yeah. Lenders I think they can go higher than that. I'm not a mortgage expert, but I think they can go into like the mid 40s, even higher, maybe. People move out of California and they can afford a home, but they lose their job and have to get a home in a local market, and it's not so simple. That's true. Yeah, if you have a job in California or wherever and you move and you lose your job, it's not easy to get one in a lot of cases. Not like it was. Look at this. Reno lenders qualify for 59% of pre-tax income. That's nuts. That's nuts. So, look, there are definitely problems. Don't get me wrong. I'm not going to tell you that the market's great and there's no pain in the market. They're definitely pain. Like, you approving people at 59% of income, you're going to have pain. So you're looking for land? Depends on how much you're looking for. But there are definitely opportunities out there. I just talked to somebody from Atlanta who owns a property in I don't know how far you want to be outside Columbus, MJ, but there's a guy who wants to sell some property in Mount Vernon, Ohio. And he's from Atlanta, doesn't live in Ohio, obviously. And I think it's like 35 acres. I just talked to him a few days ago. I don't know if that's enough land for you or not, or you're looking for less land. And he came from 3/4 of an acre, so 35 acres is a lot. Maybe it was HGTV where people would be a barista and a dog walker and had a home budget of $800K. Maybe they must have already had a house, right? And selling it or some inheritance or something. That doesn't seem to work. People don't realize how much of my generation is still living at home, and it's not because we're lazy. Oh, right. I agree. There's probably a lot of folks that live at home still and aren't lazy. I run into them all the time. So when I say that most people are too lazy to do the work, I don't mean necessarily lazy, inherently lazy, but there's a way to find opportunities that most people don't realize. And it just takes a lot more unique work than going to a 9-to-5 job, right? Like, you're going to have to you come home from your job after working all day, and instead of doing anything you want to do, you're going to have to go look at properties or go follow or go write, send letters or look for properties, look at properties, analyze properties, make offers. You're going to have to do that grunt work, that grind every day when you come home from work, from your 9-to-5, do it all on the weekends, do it in the mornings, get up at 4 a.m. and do it before you go to your job. That's what it's going to take, I think, to find a deal now in a lot of markets. A lot of times I think people just don't know that that you can do that. You get a lot of good comments, though. People are buying a home thinking their job is permanent. McConaughey is right. If there's any form of economic correction, layoffs, 20-30% of housing market goes down in fire. It could, yeah. Did you know, here's the crazy part. You've got a lot of good comments. A lot of people on here do. And during the GFC, home prices went down in Columbus 13%. That's how much home prices actually fell. So it wasn't like 50. It was like 50% in Riverside, California. I think the worst was like Modesto, California. I think they went down like 60 to 70% or something. But there are areas where they went up. Like in Pittsburgh, PA, home prices during that time, from beginning to end of the GFC, went up like 5%. It's crazy. So depends where you live. It's all about location and inventory. We do need a NVIDIA plant. I hope, what's that guy's name? I can't remember his dude's name, the CEO there. Guy wears that black jacket all the time. It's like, really, dude? You can always wear that. How many of those jackets do you think he has? He's probably opens up his closet. I mean, he's a billionaire, right? So he opens up his closet. He's probably got like 100 black jackets, like some kind of odd science fiction movie. He's like, I want to be like Steve Jobs, where I wear the same thing every day. I don't have to think about it. Or like Mark Zuckerberg. It's like, all right, whatever, bro. We do need that. A NVIDIA factory would be awesome. Maybe they'll take over the factory. I think there's a chance it could be purchased by Taiwan Semiconductor or somebody like that. How ironic would that be? Taiwan Semiconductor in Licking County, Hillbilly, Ohio, now owns the plant, and it was put together and funded by the CHIPS Act and local Americans. Ironic? Maybe. Well, it didn't cancel yet. Oh, all the Tesla, Amazon, and others ruined Reno, and we are now the new Fresno, Cali. Only warehousing jobs, low-income housing, and gangs. Shoot, man, that stinks. It hadn't been canceled yet. Oh, we got somebody else. Unicasa. I'm in Jacksonville, Florida. I was thinking about buying a house, but people are not decreasing the prices when you try to negotiate. Let's look at that, shall we? Maybe I should be using the monthly data now. Let me look. Jacksonville. Let's look at Jacksonville. Okay. Maybe it's not going to let me do it. Let me look at, let me go up here. Probably easier to look at. Metro. Got a couple more of me, then I got a jet. You guys have been fantastic. I've had fun today. I've had fun. And I hope you learned something. That's Jackson, Ohio. You don't want to live there. Well, maybe you do, but it's not like Jacksonville. All right. New listings in Jacksonville, Florida. What's happening here? Down 10%. That may be why people are not willing to negotiate. Maybe they're getting a lot of low offers. And so they know there's less or fewer homes being listed. Maybe that's one of the reasons, but let's keep going and see what we see. Active listings, how's that? Wow, look at that falling. So Unicasia, that's what you should look at. Look at inventory and understand how many homes are on the market. If you're seeing homes we only have 6% more homes in Jacksonville, Florida, which is insane, by the way. Only 6% more homes than last year. There's probably not a lot of sellers in distress. So if you're seeing something on the MLS, and I don't know what your strategy is, and it's been listed for let's look. Median days on market is 71. So homes are sitting a while when they are listed. There's probably homes that are moving fast, but a lot of them are probably sitting a while. Maybe they need a ton of work. Maybe the price is just too high, like you said, and the sellers are unwilling to budge. Maybe that's the case. And that could certainly drive a seller to be like, no, I'm not selling at that price. I want what I want. If I don't get it, I'll just relist it next year. But if the days on market is 71, you may have to find something that's been listed for 90 days and then make a low offer. Now, let's look at median sale price. Median sale price down 2.7%. So you've been under 2024 all year. Like you peaked in 2024 at 389. Now you're at 372, but it's been steadily going up this year. So it doesn't look like there's a crash there in Jacksonville. Active inventory isn't that much higher than last year. And new listings aren't performing very well. But you do have a high days on market. Let's look at the weeks of supply ratio. Weeks of supply, 22 weeks of supply. That's like it's over 5 months. Meaning, if you didn't add any more inventory to the market, it would the inventory would last about 5 months. That's considered a balanced market, but headed towards a buyer's market. That's really what that's considered, and that's because the median days on market's so long. But you're not adding a lot of listings. Let's see if there's homes sold. What's that doing? Homes sold down 3.3%. So there aren't a ton of there's not an explosion of buyers in the market, but it looks like people just aren't listing their homes. Look at new listings down 10%. So you had 676 listings added. Let's look at how long homes sold, or how many homes sold. 594. So you added like 76 listings to the market. Is that a lot? Not really, probably. So I would encourage you to look at that days on market, the median days on market in your area, in your specific area. Get with a realtor if you're already working with one. Ask them for the homes that have been listed longer than 70 days and see what that list looks like. The other thing you can do is look off market. You can go back and watch the replay of this. I talk about how I find deals off market and from a wholesaler or just from a homeowner, and it could be a way to get an opportunity. But if you're just looking on the MLS, look for longer days on market, make an offer that makes sense for you, even if it's disrespectful and low. Make the offer and make sense for you. Then follow up, make it again in a couple months or a couple weeks if the home hasn't sold. There's no law against making a low offer, so make another low offer and keep going back to the till. Maybe eventually the seller will be like, obviously I'm not selling this thing and this person really wants the home. Sometimes having a buyer who really wants the home and is ready to buy, even if that's a lower price, is better than sitting around waiting for the dream price. Eventually, sellers will figure it out. They'll either take their home off the market permanently or they'll drop the price enough to get somebody to bite. But don't give up. Keep making offers. Do not give up. But have the correct expectation. So if the home's been enlisted for 2 or 3 days, getting a 30% discount probably isn't going to happen. You need to find somebody who's like pulling the fire alarm. I also, this is for everybody, I would pay attention to homes that have a renter in it, a tenant. That's why this list here, right? These are the wholesale properties in Columbus right now from one wholesaler. A lot of these have tenants. Well, you can see vacant over here. It says vacant at closing, vacant within 3 weeks. This one's tenant occupied. These are all vacant, vacant within 7 days. I guess vacant at closing. I guess that means that the renter's going to leave at closing, leaving soon. But if you can find one with a tenant in it, that's not necessarily a bad opportunity because it'll probably need cleaned out. It may need a lot of work. But most buyers are never going to try to buy one of those for their own house. They look at it as an investment property, but it could easily be a opportunity for you. Okay. So I've told you guys about this. This is the last thing I'll show you, and then I got to go. This is an article from Resi Club again. We looked at it earlier. But this map, and it's not interactive, unfortunately, but this map shows us where FHA loans are concentrated the most. The reason I'm showing this to you, and this is for you, Unicasia, I hope I'm saying that right, or anybody looking for an opportunity, is that we know that FHA mortgages are in trouble, right? We know that. So you look at this chart, and this shows us the percentage of loans that are FHA that are more than 90 days past due and delinquent. And you can see down here, it's a good portion. I think it's about half of all delinquent loans are FHA loans. Then I can look at this map and understand where are the biggest proportion of FHA loans located. Well, in Ohio, it's 15% of all loans are FHA. In Texas, it's 17%. Oklahoma, 21%. Florida, 16%. So if you're in a state like Louisiana, even Georgia, Texas, what's that, New Mexico, I guess one could say even Ohio, right? They have a larger percentage than other states of FHA loans. And if there's a lot of pain inside of FHA mortgages, that may be a sign that there could be deals coming or deals out there very soon as the FHA foreclosure extend and pretend programs that are in place right now come to an end. And those people are forced now to actually make a mortgage payment. They could end up being foreclosed on or having to sell. That could give you some insight. Like, is this Mississippi 22%? The Mississippi housing market's not good. That's Alabama, 17%, Georgia, 17%, Florida, 16%. So that may be where you see the most pain, or in the darker red states. Anyway, I thought that was kind of interesting too. Man, I've given you guys a lot of info today. Okay, yeah. Never thought of that, right? I do too. I pay for YouTube Premium. You're not even seeing the ads. Oh, man, Luigi. You had to do this to me. Westchester County, New York. I can't help myself. I got to look at this. I don't know. Let's look at the data and see what we see. This will be really interesting. And I'm so glad you brought this up. Westchester County, New York, right? Well, the first thing we're going to look at is inventory. But let's look at new listings first. So new listings, 782 you had, and this is for the month. And I use this chart, this monthly chart, because I want to look historically at what this data looks like, not just over the past couple of years. So I wish they had this type of data on the weekly data. That would be fantastic if it was on the weekly data too, but they don't. So right now, 782 new listings. Let's look at year over year. You're down 7.6% in new listings in Westchester County, New York, right? You said New York. I want to double check. Yeah. So you're down there as far as new listings, fewer people listing their homes for sale. Let's look at inventory. Oh my. %9.5% lower than last year. You have 9.5% fewer homes for sale, or you did in June of 2025 than you did in June of 2024. And if I look at the value of homes for sale, you've got 1,431 homes for sale in June, at the end of June, right? Look back in 2015. It's weird this only goes back to 2015. It doesn't go back to 2012 like the other state did. But in 2015, you had 7,211 homes for sale in Westchester County. The reason why I'm happy you brought this up, and I think it'll give folks some insight here as to what's going on with the housing market, right, overall, is that I just listened to a video, an interview with Adam Taggart. He's a YouTuber. I think it's like Thoughtful Money or something is his company. He has great guests on. Like, his guests are A+ guests. He always has Melody Wright on his channel. He's had her on there several times, and she always provides great information around the mortgage market, where I think some of her narrative is odd and like maybe she actually believes it, but I wonder if she actually does. Like, she says how she actually named Westchester County, New York. And she's like, oh yeah, there's pain there. There's going to be pain. There's a lot of people that are being forced to sell. And I almost wrecked in my car when I was listening to this podcast, because I was like, wait a minute. Inventory, there's a lot of inventory in Westchester County, New York. It's rising. Interesting. It's not rising. It's not rising. Like, it's fallen 7,000 homes for sale back in 2015. Before COVID, you had 3,959 homes for sale. Now, I mean, do we really need to go there? But look, 1,431. So you just need it's Luigi, right? Is that right? Yeah, Luigi. Yeah, Luigi, you just need a lot more homes to bring prices down. Prices could fluctuate up and down each month, no doubt, but I can't imagine the trend showing a huge decline. No, it's not. $878,000. It's an all-time high. Year-over-year change, you're up 5.8%. So, like, again, just be careful of what you buy into and just look at the data, not the narrative. And so if the data tells you that the prices aren't coming down in Westchester County, New York, they're up 5.5%. Earlier this year, they were up 17%. But right now, and you asked, is there any chance that home prices are coming down? I would confidently say probably not right now, Luigi, because there's just not enough homes for sale. There's just not enough inventory. So you're going to see that distress. If it does happen, you're going to see it in the new listings. If you have a long horizon on buying, just check Redfin. This data updates. The weekly update up here is every week. This data down here is every month. But just check it and ask yourself, hey, am I seeing a lot of homes for sale? Or am I not seeing a lot of homes for sale? Am I seeing a lot of new listings? Or not? If you're not seeing a lot of new listings, that means a lot of people don't need to sell. What about months of supply? Let's look at that. Oh my goodness. This chart right here tells you everything you need to know. Look at this. Back in May of 2015 in May, there were 11.2 months, not weeks, months of supply. Months, meaning you don't add any inventory to the market. It takes 11 months to sell through your inventory. Flash forward all the way down to now, and you've got 1.9 months of supply. This means that if you stopped putting homes on the market, your inventory would last less than 2 months. So you just don't have any, for the amount of buyer demand, you don't have any inventory. Like, let's look at homes sold. I don't know what that's going to show us. Be interesting though. You sold 766 homes in June in that county. And year over year, that's up 5.5%. So there are more people buying homes than last year, percentage-wise. Of all the homes on the market, the inventory, you've got 1,400 homes. You sold 766 last month. How many did you add? 782. So you almost sold more than you added. That is a crazy market. And I feel for you if you're trying to buy a home there. I don't see how you could get a discount off the MLS if you were really crafty, but you're going to have to probably find something off market. And even then it may take you a long time to find something that is priced where you need it to be priced. And there's probably no new construction there, right? The Northeast doesn't have a whole lot of new construction. There's tons of, taxes are high too, right? One of the higher tax areas that we looked at today. So I feel for you. This is a horrible market if you're a buyer. If you're a seller, unless you're buying another home or unless you have tons of money, This is going to be a tough market as a seller or as a buyer, no matter what you're doing. I'm sorry. I feel for you, man. That's not good. It doesn't seem like prices are going to come down there anytime soon unless you see more new listings and more active listings. Anyway, I'd love, again, I know Melody Wright, some of her information is amazing on mortgages. She's taught me a ton. But when I hear her say stuff like Westchester County, I analyzed it. There's pain there. There's people being forced to sell. I'm like, where? They forgot to tell the data because it ain't showing up. And, I think she's been scorned by the housing market, so she wants the prices to come down. And I understand that a lot of people do, but I'm just trying to give it to you straight. Not trying to sugarcoat it or give you false hope. Wow, that market's nuts. Sheesh. Oh, well. I don't think you'll see a decline in prices anytime soon. Long way to answer that, but that's it. Still got 57 people on. 57 people. Great. Give me a thumbs up, would you? Please. And share the video with somebody. That helps my channel tremendously. I'm not doing ads. So, well, on the live. I'm doing ads every other time. A couple more comments and then I'm gone. 3 hours and 16 minutes. Holy shnikes. Packet Watchdog. What's up? I like your dog. What is that? Is that it looks like it almost looks like a I wanted to say Saint Bernard for some reason. I'm not sure what kind of dog that is. It's a cool looking dog though. Sorry, I just like dogs. Hangry. That's a funny name. People keep comparing us to Florida. We haven't had 30 to 40% insurance premium increases, and our property taxes are lower than them, which still interest old people who can pay cash. I don't know where you are, Pocket Watchdog. No state income tax on military pensions or Social Security here. Wow. Still trying to understand why CA hasn't crashed yet with their insurance and property taxes and values sky high, while those tech white collar jobs are dropping by the literal tens of thousands. I don't know about the whole state, but one thing I can tell you about California is when you look at the percentage of mortgages underwater or delinquent, it's like some of the lowest in the nation. And I think it's because people never sell their properties out there. That's my guess. And so maybe they just have a ton of equity. And also property taxes, remember, they're capped on that increase every year there because of Proposition 13. So a lot of people are disincentivized, I think, to sell. They're encouraged almost not to sell from what I can see in the data. But I mean, I think like a place like California is popular. I know people are leaving, but I think there's a lot of people that want to live there or want to buy a home there or live there now and want a home. And so I think when good homes probably come on the market, if they're priced even close to what they should be, they probably sell. I'm about to interview an agent out there. If you all know a good agent in California, let me know. You can put it in the comments after the video or send me an email. I just like to connect and do an interview with somebody in California, find out what's going on. Hangry old man. We're in Gilbert, Arizona, which was frequently made up of the top 100 places to live, great schools and community. That should help. Yeah. Let's look real quick. Gilbert. What? Maybe it's, let me see this. What in the world? Hang on. New listings, data. Let's see. Median sale price. You have to go to this place button, not the Metro button, I think. Let's see if it comes up now. Yeah, there we go. Gilbert AC. I've been out there many times. That's really interesting. The sale price. See, look at this. Look in 2000 and so hangry old man. Look in 2022. Look at that price drop. Right? It went from 620 down to 519. Like quickly. Maybe that's the price drop that they had, because then it kept going up, but it's dropped recently. Now you're at 595 for median sale price. But you came from 620, so I mean, somewhat of a discount or a change in value. But let's look at inventory. $1,043 homes for sale. Wow. Look back in 2020, 2014, you had 1,483 homes for sale. So, I mean, completely different than Westchester County. So you're only off 400 homes from like, and we can't go all the way back to 2008. I would love to see that data, but they don't show it. Nobody does. So you have to go. So when you look at this, it's like, man, you only need like 400 more homes to hit like an all-time high. So that's a market where inventories definitely looks like it's increasing. Let's just look and see year over year how it's doing. Yeah, I mean, you're up right now 44% in inventory of homes for sale. That's a lot. And historically, it's a good amount when you look at the value. Like, you definitely have more inventory than the last few years. I mean, look back during COVID, when COVID hit, you had 450. Well, no, that's not right. Right when COVID hit, you had 618 homes for sale. And then in June of 2021, you had 452 homes for sale. And then it shot up in 2022 like it did in a lot of other areas. Then it dropped, but now it's gone up again as far as inventory. So you're definitely building supply. Let's look at months of supply. This will be really interesting to look at. Where are you at? 3.6 months of supply. So it's still a seller's market technically, but it's close to a balanced market. A balanced market's like 4 to 5 months of supply. Anything under 4, I consider a seller's market. Anything under 2 is a strong seller's market. So you're headed towards a balanced market. There must be people buying homes there. $293 homes sold. Well, right now, down 2.7% year over year in home sales. It's been kind of up and down, but let's look at the value again. 293. Last year you had 301, so a few less people buying homes, a few less, fewer people buying homes. Back in 2023 in June, you had 380 homes sold. So people aren't setting the world on fire with buying homes. You got to think it must be people pulling their homes off the market. That's the only thing I can figure. Days on market. Let's look at that. 52. And year over year change, 11. So it takes 11 more days right now to sell your home than it did last year in June. We can't look at delisted homes. They don't have that. Let's look at sale to list price ratio. Yeah, 98.2. That's pretty low. So people are getting about a 2% discount on average on homes sold. Sold above list price. How many homes are sold above list price? Only 10%. Nationally, it's 26, right? Or is it 22% nationally? I think it's 22% nationally. So there's not a lot of people paying over asking. So are you selling? I sounded like you were selling, right? Great schools community, that should help. I'm guessing that's what you're doing, or you're just wanting values not to crash. I don't know if values will necessarily crash, but you're definitely building inventory. And so I wouldn't be shocked if home values struggle to come up. Maybe they're soft, meaning they slowly come down a little bit over time, as long as that inventory stays higher. And so all these indicators you can look at and just logically ask yourself, all right, now if there's only 10% of people paying over asking, but back in 2020 or 2021, it was 74% of people. That's nuts. Look at that. 74% of people back then were paying over asking. Well, it was a sale to list price ratio then. Look at that, 104.7%. So that swing is about 6.7%, right? Because now it's 98%. So that's like a 6% difference in how much people are paying for homes, I guess. And that's reflected in the median sale price. $595 now. And you peaked at $620. Look back in 2013 or 2012. $168,000. Holy shnikes. I'll take 3, please. Yeah. So you've recovered some of that median sale price loss, but your inventory is building, it looks like. So I would think that prices could kind of keep sideways, maybe soften. But if this inventory gets out of hand because of whatever reason in the economy or the local or national economy, if that inventory gets way out of hand, like, you get to like what? Like back here, you had 1,400 homes. You got to like 2,000 homes, 2,500 homes for sale. Well, that would be a problem. And this would the same thing happen nationally or in any market. And just a little while ago, we looked at Westchester County, New York. There's nothing there for sale. But in Gilbert, I got to think there's new construction, and that'll certainly help. That'll certainly help. Okay. Wow. Awesome to look at. Oh, man. Boom. Nice. Double the population living in the Phoenix Valley since 2014. So that 400 more home numbers doesn't mean a lot anymore. A lot more supply of people living there. Good point. Oh, you think I can get Meet Kevin on my channel? He probably charged me like, who knows what, $20,000, right? He'd come on with his bow tie. Yeah, I tune in to Meet Kevin. Yeah, that'd be awesome. Well, I do know a good agent up there, actually, Jason Walter. Yeah, I'm going to have to connect with him. I wouldn't even think about Jason Walter. I don't know why I didn't. People think I look like him. They're like, are you Jason Walter? No, but I do know him. I mean, I've talked to him on the phone a few times, and he actually helped me with my YouTube channel when I started it. So thanks for making me think a little bit. But yeah, maybe I'll Meet Kevin. If you know him, ask him to call me. Send me an email. Babe King, what's up? A lot of Americans with multiple homes. There are a lot of people with multiple homes. A lot of accidental landlords, right? Like even Travis at Real Estate Mindset has a rental property. He talks about it sometimes, but he is a landlord. He is one of the people that own a multiple home. And it sounds like it's kind of an accidental landlord situation. But I know he cash flows well off of it. I think his rate, he tells us, is like in below 3%. He'll never sell that. If he did, he'd be a fool to sell it. Like if he said it cash flowed like, I want to say it was like $800 a month or something. Why get rid of that asset unless you absolutely have to? So I think there's a lot of people, Babe King, you're right, that have the second homes. They may have no mortgage or low interest rates. If they have if they're competent at all, they have a renter in there who is paying their mortgage for them and giving them cash flow, even if they break even. Like I had a rental in New Albany here for a while. Our first house we bought, we kept it, sold it. We kept the home, rented it out to a couple people, nice couple. And we actually were losing money every month. I was losing like $50 a month. But then when something would break, I'd have to pay for it. So I wasn't even cash flowing at that time. And that still made sense to keep. Now, should I have sold it? No. I sold it 4 months before they announced Intel, which is in New Albany. And I did well with the property. I sold it for a lot more than I bought it for, but I'd have made another $50,000 probably if I'd have waited. But what I should have done is just hang on to it, and I didn't. I tell everybody, hang on their real estate. People have multiple homes. You're correct. Thank you, Love and Two Limes. I really appreciate it. I appreciate all you guys. All right, I got to go. 3 hours and 30 minutes. It's a record for the housing nerd. Unreal. But you had great info today, especially Cody. I mean, everybody did, but Cody's comments really stick out to me because they have you had some data there, very pragmatic. I love that. I love that. Anyway, you guys are fantastic. Great conversations. I appreciate your time. I appreciate your support. Your time's very valuable. So I can tell you enough how much it means to me that you're watching. And be on the lookout. I've got a cool video coming out in the next couple days. Maybe tomorrow it'll come out where I talk about new home construction and some problems going on there. And if you want to know more about the Ohio housing market, I have an Ohio Housing Nerd channel. Oh, I can't resist this question. I'm very uneducated on this subject. Could you tell me when the true property taxes kick in for a new build? It depends on when you buy it because they do that reassessment every 3 years, right? They may catch it. Well, it's like every 3 years and every 6 years. So they may catch it before then, and I wouldn't bank that they didn't. But I think if you bought like a new home right when they reassessed taxes, which was in 2023, I think they're going to reassess them in 2026. So I would think if you closed on the home this year, you would then not see the taxes maybe until 2026, the end of 2026, perhaps. But that's a question. You should call the county auditor directly for that. You don't have to tell them anything and they'll talk to you. But most county auditors are cool when you call the office and just ask them that question. Say, if I buy a new house and I'm getting taxed on the dirt, I figure that's what you're asking. When do I actually get the real property tax bill? Is it after you do the assessment in 2026, or do you do it after the property's recorded? I think it's after 2026, after that reassessment. That's how I believe it works. Why is Travis renting? I think he's in a situation. Well, I don't know. And he's waiting for a good opportunity, I believe. But maybe you should go on his channel and ask him directly. I don't want to speak for him. But he does have a renter, and he's a landlord. But I don't know. I don't know his personal life, so I shouldn't speculate. All right. You guys are fantastic. I'm out of here. I had to grab some lunch. I'm wiped. Have a great day. I'm the Housing Nerd, and I am out. OUT out.